Hi guys, thanks for joining in. This is Jerry Wong, I advisor to small caps and investors in the small cap space. We have a number of guests with us already today. There'll be probably quite a bit more joining us in the next 5 minutes as the event gets going. You can probably see it in the chat. Send us your questions on Twitter, on LinkedIn, emails. We're quite easy to get a hold of. We have our associates here this afternoon, Kevin and Jack, joining us with a few CEOs from 5 companies. And we also have 5 newsletters, writers, and investment analysts joining us as well. First up, we have John Feneck joining us from the US, coming up in about 5 minutes time. Just briefly about Jemini, what we do. We're a merchant bank advisory firm in Canada, primarily investing in North America, advising natural resource companies. I'm a CFO background myself. I've been investing in small cap space for 10 plus years. Some interesting companies here on the gold mining side, resource, uranium, energy metal space. And we'll hear from a wide range of respected investment analysts, newsletter writers, such as John, Jayant Bhandari, former fund managers in the next 3-4 hours. And the event today will be recorded, so we'll have this replayable on YouTube for those of you that left it or had to leave early. Of course, feel free to send it in the chat. It is a webinar format, so if you need to say anything, feel free to raise your hand. We'll go to it, obviously, in a reasonable manner. You'll be able to see, just for housekeeping, on my right here, a bit of a schedule, so you can feel free to jump in and out as you need to. We have John Feneck starting in about 3 minutes for his small cap symposium opportunities pick, followed by Forum Energy Metals. We have Brian Leni, his small cap investments profiting in uncertain markets. Kenorland exploration. We have Zach joined already, Zach Flood in Vancouver soon. Justin Hahn is a well-respected uranium analyst. He'll be joining us pretty soon, around 2 o'clock Pacific on the West Coast here. We have a larger company here called Encore Energy joining us. Paul, the CEO, will be joining us. We have Gold Silver Pros, a good friend of ours, Robert Kientz, joining us as well at 3. Indonesian mine developer and emerging producer, Baru Gold, will be joining us, followed by Jayant Bhandari, protecting downside and profiting from the upside at 4 o'clock, and then lastly by O3 Mining, Jose and his team in North America and near the Osisco territories. So I see we have the CEO from Forum Energy Metals joining us as well. He's the second up. Rick, can you hear us okay, or how's the reception over there in Saskatchewan?
Yeah, I can hear you just fine.
Perfect.
Thanks, Jerry.
Of course, yeah. No, we're just waiting a few more attendees, a few minutes away, but we want to keep it snappy. We don't want to keep everyone too long. It's still kind of the tail end of summer for many people, even though it's the first day of September. But we're about 15 attendees so far. We got about 10 panelists, so hopefully everyone will have a great conference. We have our associate Kevin and Jack joining us here too to kind of help moderate. And then obviously we can have John get started pretty soon. But yeah, we just kind of did a brief intro. Before kind of John started, I mean, John, did you want to maybe give a brief intro yourself, or I can kind of read your bio as well? You were a former fund analyst, broker many years in the US with Sprott, well-known fund manager and silver analyst in the space. And obviously, John Feneck Consulting is your LLC, is your new firm, and you've been very successful at some stock picks. We'll be looking forward to seeing your picks, but you have the floor, John.
Great, thanks, Jerry. Can you hear me okay?
Yeah, listen, going fine, yeah.
Okay, so where to start? I guess, I think that the average attendee today, the average listener, the average investor in the space since September of last year has seen a number of what we would call whipsaw moves, right? We had a blow off top last summer, which probably ended in September. And then we saw this year some pressure in March, which we call the double bottom, I think March 8th and 30th. That was the near-term low. As you know, the sector tends to, every 6 to 7 months is sort of a period of a correction, I find, in mining over 25 years, right? So we were ready to buy in March. We did buy. But then in April and May, we had a nice rally that got faded pretty quickly. And so investors got disappointed by that. And then we had June 16th with the Fed, getting pretty hawkish, and that also hurt our sector. But then we had the Fed do a 180, and in July 28th meeting get really dovish. And we thought Powell was extremely dovish. The market didn't really think so, but we thought that those comments were constructive. We put a lot of assets to work after that, thinking that this was sort of close to the low. And then August 6th derailed the sector again with a high non-farm payrolls number, which again was higher than expectations. And then in July they took the June number up 80,000 plus jobs, which was unexpected. So one of the things, Jerry, that people look at is a hot non-farm number to get the Fed to act to raise interest rates. So that wouldn't necessarily be good for the equity markets either. August 6th to August 27th was sort of pins and needles, low summer volume. And then August 27th, we were betting on Powell being constructive, and he was, right? I mean, I think the Jackson Hole speech is something everyone here should take a listen to. I don't see anything in that speech from Powell saying we're going to raise interest rates anytime soon, right? So that kicks this taper talk down the road from September 22nd's meeting all the way to November, in our view, and maybe December. It just depends on how things go from here. So what does that mean for the average person listening? It means that from now until the Fed meeting in November, you've got a nice runway, and you've got multiple conferences happening. There's 4 mining conferences happening between September 8th and October 22nd right now. So whether those are virtual or in person, one of the things that I do, Jerry, is I talk to CEOs like Rick all day long, and they are pumped to deliver their message here in September and October at these conferences. They've been trapped in hotels, trapped in their houses for 18 months. Everyone's tired of not being able to travel and get the message out, right? So I think this is going to be a very constructive month of September, and I feel like a lot of companies have, had the drills working, and there's going to be some great results coming here over the next few weeks. So, we're fully invested at this point. Fully invested for us is 4% cash, frictional. We think there's a lot of opportunities, and
No, I think we lost your audio, John. Did you have a screen share coming up?
Can you hear me okay?
Yeah, that's fine. Yeah.
Okay. Sorry, I don't know what happened there. So as I was saying, we look at not just gold and silver, Jerry. We're looking at copper. We're looking at platinum, palladium. We look at industrial metals as well for opportunities, and we see a lot of opportunities in that space as well. The juniors in particular, a lot of these trade on the OTC with 5 character tickers. They have really been bombed out, and so we've rotated away from quality to higher quality small and micro caps, if you will. And by quality, I mean like the Newmonts and the Francos of the world, which I still think are great values. But we're trying to deploy capital into names that would have more upside for us. So with that, I'll pause. Is there anything that you may want me to talk about in terms of macro or get into some of our picks? What would you like?
Definitely. If you have a screen share or any of your picks in your current portfolio, John, obviously Forum right after you is one of your picks. so they'll be coming out right after you.
Yeah, I'll start with Forum. I mean, I think very highly of Rick. We just met this year, but I'm always on the lookout as a former writer for Sprott on Palladium for anything in the Palladium space that's publicly traded. So that was what originally got me interested in Forum, is that Love Lake is a palladium, nickel, copper deposit. And, there's only a handful of traded companies you can buy in palladium. So it's like Forum, it's got a QB listing. It trades very well versus a lot of the things that I buy every day. And Janus Lake, of course, was more attractive in that they have a JV with Rio Tinto. And Rio is, a huge player in the mining space, obviously. So I think that speaks volumes for what's happening at Forum, is that, why would a major company like Rio spend the money to do the JV, right? There's obviously something there that they like. Lastly, they have the uranium asset, which is The larger one is JV'd with another large company, and that's something I'm sure Justin can speak to better than I can. Uranium isn't my wheelhouse, if you will, but I think that when you look at a diversified portfolio of names, in this space like copper, palladium, uranium, it really diversifies your risk in a stock like this, Das, right? It's not like all silver, all gold. You're really betting on one metal to do well. This is a very diversified stock.
Okay, that's excellent. Any other ideas from your portfolio ahead of Beaver Creek, John?
Yeah, sure. So I'll go through a couple that we like in each of the metals. First off, I guess, is silver, because silver is, to me, the most depressed metal right now. We get a ton of emails from people asking about silver, and I was on the silver PM team at Sprott, so it's near and dear to my heart. But I'm also a pragmatic guy, and I look at the chart and I say, wow, this thing didn't break $30 an ounce a couple times now. So that is obviously resistance. So it frustrates me when people get on shows like this or podcasts and talk about $80 silver and $100 silver, because we haven't broken 30, right? So like the average client out there needs to understand these people are talking about maybe a 3 to 5 year time horizon, and they're not talking about something that's going to happen this year. So with that said, we try to find companies. You mentioned in your intro, Jerry, about Baru Gold, a company that's going back into production. We like that. A lot of people in our chair don't like that, because right now producers are getting no love, but they will, and I think they will next year. So we're buying ahead of that. One that comes to mind in the silver space is Golden Minerals, which is symbol AUMN. I went on a large podcast this weekend and talked about it. There's a near-term opportunity with Rodeo, which is their small mine in Mexico. But what most people don't understand is that they share a mill with Velardania, which is right near there. And Velardania is what drove the stock much higher in 2015. So the stock was trading poorly in 2015, around 50 cents, right around where it is now. And then they announced that they were going back into production in Velardania, and the stock went from 51 cents all the way to $1.51 in less than a month. Never, ever going to say that that's going to happen again this time. I think we're in a different environment. However, restarting Velardania is definitely a catalyst for that stock, and I followed it for 10 years. So I think people need to be aware of that. There is a decision being made on that here in October of 2021. So you don't have to wait very long as an investor to get some type of clarity from the company. We're obviously bullish, and we think that the company will make that restart decision. On top of that, they've got a really interesting asset, silver asset in Argentina, which isn't my favorite country, but you have to look at each of the provinces, right? So they're in the Salta province, low tax rates. They joint ventured that with Barrick last year. So Warren, the CEO, is a former Barrick exec. So they really de-risked their portfolio, I think, by doing that. They gave up a lot of it, obviously. However, Barrick is Barrick. So if they find something there, that unlocks a ton of value, and the stock is, seeing none of that love right now in price. So another name, I guess, in gold for us would be US Gold, which is USAU. US Gold is a NASDAQ traded gold stock with a 7 million share float. Now, I've done the math. Like Jerry, you're a great mathematician. I like to do the math too. And in looking at 7 million shares, I can account for 4 million of those shares right now. And I know that the 4 million shares are not selling anything at $9.30. So when I look at the public float being 3 million shares, that's just about as tightly held as you can get, right? Like, you've got liquidity being a NASDAQ stock. You've got a very tight share structure. You've got a leader in George B., who is an absolute rock star in the mining space. I mean, this guy has worked at major mines in Barrick and other, companies in his previous life. So what's interesting to me is I went there in June in Wyoming and toured their copper mine and their copper site. It's not a mine yet. It's called Copper King, CK. And what's interesting to me is that they have all this aggregate there that, for people that don't know what that might mean, it's basically waste product that, is like granite, right? Granite countertops. Think about granite countertops and who makes granite countertops or needs that kind of material. And there's a company right near there, less than 3 miles away, called Martin Marietta. So Martin Marietta is a huge player, and they need that granite. And I think that the market's completely missing this. I wasn't aware of this before I toured that area in June, but they think it could be very valuable to them, and really, pay for all of their mining operations going forward. So if that's the case, dilution goes out the window, and you've got a $60 million, $70 million market cap company that's NASDAQ listed with a lot of leverage. So that is our top gold pick at this point. Shifting to Palladium, I think very highly of Forum, as I mentioned, in their Love Lake project. I also like Canadian Palladium, which is DCNNF. Again, like Rick at Forum, Wayne Tisdale, who runs that company, has a lot of experience, and he built Rainy River for New Gold. So again, that's their top producing mine in NGD. Why would a guy be on a 7.5 cent palladium stock if he didn't believe in it, right? So I look at their drill results in April, May, and I see a lot of upside there. And the market's completely missing it. So, you see these weird opportunities. And I just talked to a $1 billion, financial advisor yesterday who was really interested in this, that, is an RAA and can buy it. So all you need is someone like that to put a little love behind a stock like that, and it's going to move up quickly because it's just been languishing, So outside of that in Palladium, we like another Palladium stock called Group 10. Group 10 shares geology, shares the rocks literally next door with Sibanye in Montana. Sibanye is a company that we've owned on and off for many years, know what they have there in Montana. We were Stillwater shareholders prior to that, so we've been in that area for many years. And I think Group 10 is going to put out news that indicates that their geology there is fantastic. I mean, they've put out some things over the last few months that indicate they found a lot more rhodium than they thought. But I think the palladium rhodium component alone is worth way more than where the stock's trading here at 28 cents US. Let's see, lastly, I would say copper, is something that we've been playing since late May, Jerry, of last year. Copper for us would be Copper Bank. I think CPPKF is a really interesting play here at 31 cents US. They did an offering at 28 cents US in January, so they cashed up then. They'll probably need a little more cash in full disclosure at some point this year. But they have 2 development projects, 4 other projects. They just did a due diligence meeting on their Copper Creek project in Arizona that went very well, from what I understand. Again, stock hit 65 cents earlier this year. If it's trading at 31, you're basically half of the value of where it peaked out this year. So we look at those opportunities and say, we're going to buy some cheap shares here and be patient. And there's a lot of leverage there. So, we also like that they bought their assets really cheaply, like when copper was completely out of favor. So, they bought those 2 development projects for pennies on the dollar, which is on their website as well.
Very good. Very good. That's a very thorough analysis, John. Appreciate that from a fund manager, and also someone who talks to, obviously many investment advisors throughout US. So obviously a big push towards gold, copper, and especially minerals, palladium, platinum. Also want to point out that many of these picks, they've had financings in the last year and a half, and anybody that's gone into them are up multiples, even though obviously with the recent drop. So we have about 5 minutes left before the next presentation, but we can take some Q&A. So for those that have any questions for John, feel free to send us your questions, or by typing it in the chat or emailing us or anything else. Okay. The first question, John, comes from Danny here, and he's asking, how would you position yourself right now? Would you just simply buy in the market in the case of Copper Bank, or would you wait for the private placement, which many of these pre-revenue companies generally do have to pull the trigger on every half year or a quarter?
Yeah, that's a great question. Danny, what I would do is buy it here. We're buying it right here at 31 cents US. The reason is how it traded when it did the financing in January, right? There was a huge bid out there in January, February, right around 28 cents. So it didn't dip much below that offering price at all in January, February. So typically I would tell you to wait. And this one I would tell you not to wait because copper is continuing to do well. And I think that their Copper Creek, mine in Arizona there has gathered a lot of attention from that due diligence meeting.
Okay, excellent. And for exploration companies like Forum, when's a good time to buy? As results or seasons are picking up, or are drilling results coming out? What's a good timing for that, or just usually kind of trade into the long term?
Sure. So, Rick can probably talk to that more, but I think that from my perspective, 22 to 23 US was sort of that low that it hit a couple of different times. We were out there on the bid both times and got some cheap shares. It's rebounded really sharply here over the last 2 weeks. We've seen a lot of new volume in the US. So I like it right here. I think that it's very diversified. So copper's doing well, palladium's doing well, uranium's back on, on fire. So it's like this has got all three of those elements in the stock.
Mm-hmm. Excellent. Yeah, I mean, there's also some great picks I see even on the attendees. One of our past investments and clients, China Gold has signed on as well as a $500 million market cap company that at one point was trading at 50 cents and it's trading at $4 almost. So the leverage in junior mining and small cap is certainly very much alive. So I think that's it for the questions right now. I mean, if we get more, if you can stay on for a little bit, John, that'd be great. Sure. But we can move on to Rick. Rick, can you get your screen share going? And how's the reception there in Saskatchewan?
There we go. Okay, the disclaimer. So we saw the green economy coming a couple of years back. As Jerry mentioned, or John mentioned, we started out as a uranium company, but a couple of years back we saw the green wave coming, and we started looking in our backyard at the energy metal space, copper, uranium. We already had a great portfolio, and nickel, cobalt, and palladium. So as John mentioned, we are a diversified energy metals explorer. And we have a model where we like to bring in a major partner. So right now, our flagship project, Janus Lake, is a joint venture with Rio Tinto. That's a $30 million JV. Being involved in uranium for many years, we have a great portfolio, and one of them was joint ventured by Orano, which is formerly Areva, the French nuclear miner and producer. They have a $6 million JV with us. And right now we're currently drilling our Love Lake nickel copper palladium project. It's 100% owned by Forum. We focus in Saskatchewan. To us, that's the number one province in Canada to explore. We're fully committed. Management owns about 10% of the stock. Okay, so we're listed on the Venture Exchange FMC. Over-the-counter QB is FDCFF. We just completed a financing. We now have 159 million shares outstanding, 37 million warrants. Most of those are held by management and are in the money. So fully diluted is about 200 million shares out. We're a good trader. We must trade on the over 500,000 shares on a daily basis on the Venture Exchange. And as John mentioned, we're really starting to pick up some momentum on the QB. We just got listed there in, I think it was May. So market cap's about 60 million. We've got 6 million in the treasury. 4 million of that is earmarked for exploration. $2 million to cover our G&A, good enough for 2 years. So we're in good financial position. 70% of the stock is retail held. but the most recent financing was with institutional investors. So we are gaining institutional investment. I started the company as a uranium company in 2004, diversified out in 2018 into the energy metals space. Ken Wheatley's been with me since 2007. He's one of the best uranium geologists in the Athabasca Basin, bar none. He's got eight discoveries under his belt. We've created a great technical advisory board team. Boone Tan discovered the Key Lake uranium deposit. He's always giving us some good ideas and has tons of great historical information in the basin that a lot of people don't have. And Larry Hulbert is managing our Love Lake project. Larry is Larry here is a nickel copper PGM expert. Got his PhD down on the Bushveld and worked at the GSC as the Geological Survey of Canada as the nickel copper guru there. On the board, Anthony Baum here and I started the company 2004, and we're still with it. We're committed. We brought on some new people recently, Burns here and Paul Dennison. Burns is from London, Paul in Zurich. That brings a different element to the company. And between the four of us, that's we hold most of that 10% of management stock. So we've been in Saskatchewan since 2004, and we're there because it's a great place geologically. I mean, it's highly prospective geological terrain in the Canadian Shield. We think it's underexplored. It's an underexplored part of Canada. We like to acquire things on the cheap. So, we pick things up by claim staking. We just get into the geological database. Saskatchewan has an excellent geological database. And we look for opportunistic investments, projects where juniors ran out of money, drilling and left it 10 years ago or something like that. Prospectors that are getting, need some cash, so we'll do a deal with them, that type of thing. And then our model is to do really good geological compilation. We're technically driven, and drill it. Don't try and sell it based on geophysics. We like to drill, and we like to demonstrate proof of concept, and that's worked very well for us, bringing industry-leading partners like Rio Tinto and Orano to our copper and uranium projects. So it's my job as CEO to use that capital efficiently for you, the shareholders. So we've just recently raised $4 million in 2021. 2/3 of that is allocated to this Love Lake nickel project, which is being drilled as we speak. And we hope to drill one of our uranium assets in 2022. The other third of that exploration capital is unallocated at the moment because, hey, we're just going to wait and see what the results are like drilling at Love Lake and our winter drill program on uranium. So we'll just wait and see how things unfold in the drill bit. On the asset side, how can we utilize those assets to bring our shareholders value? Well, we've demonstrated that by bringing Rio Tinto and Orano in on our copper project that we acquired and our uranium assets. And we continue to seek joint venture partners for our other projects in our portfolio. And it's a pretty frothy market. There's a lot of interest amongst juniors to get into some of our projects. And we're always looking. In fact, this year we initiated a critical metals review of Saskatchewan, and we've come up with what I think are some pretty interesting things, which we will be able to talk about later on this year or early next. So that's how we plan to deliver results, and yeah, we're a diversified player, and we kind of look at it as you investors do in portfolio theory. We try to minimize the risk and yield the highest returns by diversifying our portfolio over a number of different commodities and getting out there and drilling them and hopefully having that success. So we're drilling for discovery. 2 winter drill programs this year were conducted by our partners, Rio Tinto at Janus Lake and Orano at Fur Island. Rio Tinto continued drilling at Janus this summer. Forum is currently drilling at its 100% owned Love Lake Nickel Copper Palladium project. And we've applied for a permit to drill our Northwest Athabasca joint venture in northern Saskatchewan in the Athabasca Basin. And the only project we have outside of Saskatchewan is the Quartz Gulch project in the Idaho Cobalt Belt. We acquired that by claims from buying it from Ross Beatty a couple of years back, and we see signs of that cobalt market moving up. So we are conducting a small sampling prospecting program at that project. So yeah, let's talk about Janus Lake copper silver project. So Janus Lake is a sedimentary copper deposit, and these things tend to be large. And what we have here is a whole district, not just one showing of copper or one deposit. We think that there's several deposits there. It's a whole basin that we own. So we bought it for like $500,000 in 2018 in cash and shares. In 2018, that was the hardest $500,000 I've ever had to raise. No one cared about copper. I got 4 holes in, and we discovered 5 meters of 2% copper. Well, 6 months later, we had a deal with Rio Tinto in 2019. And since 2019, Rio Tinto's conducted a really good down-to-earth geological mapping, geochemistry, geophysics, and 3 drill campaigns to assess our property. And it's a great teamwork here. They've done an exceptional job adding value to our project. So the deal with Rio Tinto is they can earn 80% by spending $30 million. I think they've spent about $14 million to date. That's our estimate after this summer's program. So the drill program this summer just recently completed. They just pulled out at the end of August. Results are expected in October and November. We should start getting assays from Rio Tinto. So for those people that don't know the location of it, and it's in northern Saskatchewan, but the access is pretty good infrastructure. This is Highway 905, which actually runs through our Love Lake project as well, to the uranium mills. Rio Tinto built a 100-kilometer access trail to the property here. It's 52 kilometers in length. It's a huge chunk of ground prospective for a number of copper deposits. And power line runs right through the property to the Key Lake mill here. So the program in 2021 by Rio Tinto was meant to really explore the whole 52 kilometers, and no matter how many bodies you can put on it, that's a big chunk of ground to cover. But they really built up their geologist and prospecting team and walked the ground a lot this summer, in addition to drilling in this historical area here. This is the only area that has historical showings and has had any drilling. Last year, Rio Tinto picked up a 3.8% boulder about 18 kilometers to the south of the historical area. So, we think there's potential for more copper on the property here, and that was the focus of the 2021 program. In the 3 drill campaigns that have been done, they've drilled 21 holes on these 3 projects that are occurrences, Kaz, Janus, and Jansom. In the winter of this year, they drilled 9 holes on the Refuse, and they drilled another 9 holes on Refuse this summer. So it's the 9 holes from the summer program that we'll be waiting for. As I mentioned, probably the first results will be coming out in October. The target here, the exploration target, is shallow open pit. You'll be able to build. This is the typical cross section over one of the deposits. You'll be able to build an open pit on that. It's under 150 meters. We're getting grades in this particular area of better than 1% copper over 5 and 9 meters, and it's totally open. They popped only 6 holes into this, and they're evaluating all the other showings in the area to see what they can come up with in aggregate. So the Rio Tinto has done a great job this summer prospecting the rest of the property, and as I mentioned, there'll be nine more holes coming results. So turning to our Love Lake nickel copper palladium project in the battery metal space, we ended up staking. There was a number of historical showings in the area that were open for staking in 2019, and if you can believe it. We staked over 30,000 hectares of ground in what we're calling the Love Lake project, and this is the Love Lake Pluton here, or complex, where there was historical showings of copper, nickel, palladium, and platinum. Good access. The highway runs right through the west end of the property here. Here's some of the grades that we're getting. The Watt Lake area, which is currently being drilled, 0.4, 0.2 copper nickel, and 7 grams per ton of platinum and palladium combined. And the Corvin Creek area, which we plan on drilling in 1968, got over 30 meters of better than 0.2% copper to 0.3, and they'd never analyzed it for PGMs. So that's something we want to drill this year and get some PGM analysis on that. This is being a greenfields project, concept kind of project. We're keeping our eyes open for all styles of deposits, structurally controlled, like at Lac des Îles, reef style, like the Bushveld or Stillwater, and magmatic nickel copper deposits like Voisey's Bay or Chalice's Julimar discovery. Just coming out of just good basic geological work, good geophysical methods were used. The project is 100 square kilometers in size. We did a mag survey over it. The mag survey told us that there were 5 potential feeder zones that we should take a look at. We ran EM over those, and what came out of the EM survey was that we should be focusing in the area funnily enough, where there was some historical surface showings. So the 3,000 meter drill program is being focused in what we call the Corvin and What Lake areas. So we got a nice EM target out of the survey down here at Corvin Lake, and we've got 2 holes into that already. We moved the drill up to Watt Lake while we were logging that core. Moved the drill up to Watt Lake. We got 2 holes into that, where the trenches were getting some high-grade copper, nickel, platinum, and palladium. And Corvin Creek is the third area that we plan to drill, where they got better than 30 meters of 0.23 to 0.29% copper. And as I mentioned, no PGM analysis done. So yeah, we're pretty excited about popping a few holes in that. And this will be a first pass, get a look at the area. I am in Saskatoon. I'm going flying up there tomorrow. Going to spend a week in the field, doing what I like to do best, talking to rocks, and it's going to be fun on a project like that, new project like that, where you're getting fresh, brand new core. It's looking pretty good. I can say for a fact that we're getting sulfides, but you've got to get things in to assay to really find out what you've got. So on the uranium front, we've got 8 drill-ready Athabasca uranium projects. They've all been drilled by us once or twice. All of them have discovery potential as far as I'm concerned. All of them are majority owned by Forum, except for the Henday project, which is a 60-40 Rio Tinto Forum joint venture. And Rio Tinto has no plans to work on that at the moment. We do have, at Fur Island, we got a lot of interest from Orano in 2019 and did a joint venture with them. They have to spend $6 million over 4 years, and they're 2 years into that joint venture. Results there have been good. It looks like to us that things are getting very interesting. Here's an old historical mine, the Nisto mine, on the other side of Black Lake here. And we're seeing some very strong alteration increasing to the north. So we're recommending to Orano to do a resistivity survey over this area north of the island, and further drilling in 2022. So we'll see what I'll be seeing Orano next week after I get out of the bush. And the Northwest Athabasca joint venture, Forum owns close to 40% with NextGen, Cameco, and Orano as partners. We'll be funding this project ourselves and diluting NextGen, Cameco, and Orano down from this program. We believe it has tremendous potential. There's already is a small deposit there. The Maurice Bay deposit is 1.6 million pounds of uranium. Basement hosted mineralization at the deposit area has been discovered. We drilled 6% uranium with over 6 meters. There's many more targets to test here. We've tested a number of them, and we want to go back in and test this big Spring Point target, the Andy target here, and Helen down here have been chosen as the next drill campaign on this showing. So yeah, we're looking forward to receiving the permit on this project. We've submitted a permit to drill that in Q1 2022. So that's it. We're we're well financed. We diversify our metal interests so that we kind of spread the risk for our shareholders, and we've demonstrated that we can attract major partners to develop these projects to mines.
Definitely sounds good. Great job, Rick. I think John had a question as well. Just wondering how hard it must be to attract someone like a Rio Tinto to the story.
Yeah, well, it isn't hard when you've got the goods. They came to us when we drilled those holes in 2018 and got better than 1% copper over some fairly good thickness intervals, and the fact that we'd staked the whole property, that we had 52 kilometers of strike length, and had control of the whole district is really what attracted someone like Rio Tinto. That they're looking for big deposits.
Definitely.
And they think this could be big. The comparable deposit is a deposit called Udakan in Siberia, which is a supergiant. It's got like 58 billion pounds of copper in it and 1 billion ounces of silver, and it's the same age as Janus Lake, same mineralogy, etc. We think back in the Proterozoic, it probably was all stuck together in one big basin. So they think it's got that kind of potential.
Perfect. Okay, well, we'll look forward to seeing some more results from Forum in the next coming weeks. Rick, enjoy your stay in Saskatchewan. We'll see you back in Vancouver at one of the conferences. Stock is doing well today, traded over 1 million shares, over 40 cents, really breaking out. So worth a look. FDCFF on the US ticker, FMC on the TSX Venture. Next up, we have Brian Leni. I think Brian signed in on my account maybe, but Brian runs Junior Stock Review. He's the founder and editor of Junior Stock Review in 2013. As the market resource continued to decay from the highs in 2011, Brian made the bold decision to sell his family home and used 2/3 of the equity to invest in what he believed were the best junior mining companies in the market. In 2016, Brian was awarded with extensive due diligence and courage for the heart he had in pulling the trigger in the bull market. His portfolio rose over 300%. Brian is going to introduce and go over some of his portfolio top picks, including Kenorland exploration. So Brian, take it away.
Excellent. Thanks, Jerry. Thank you for having me. Okay. So profiting in an uncertain market. The gold market has been clouded with uncertainty for a while now. The equities have disconnected from their normal trading pattern with the metals. And outside the flash crash we had in the metal price, a couple of weeks ago, the gold price is maintained around $1,800 per ounce pretty steadily, while the share prices have continually, been weak. And the obvious question is why? And I can't exactly say what has happened. I do think there are a couple of factors which have contributed to the poor sentiment. First, for me, there's a competing narratives between inflation and deflation. The competition has left, many investors uncertain about the direction of the market. Secondly, the emergence of alternative investments, and the big one being Bitcoin. So inflation versus deflation, which will we see in the future? And truly, I have no idea. Markets are impossible to predict. This is a great quote by Nassim Taleb. Why is the theory never right? Because we'll never know if all the swans are white. And I think this is very true. And, with that said, I'm not going to pretend like I can predict the future, and will instead give you a few points to ponder, and, you can decide for yourself. Inflation, no doubt the cost of living has increased over the last, year to year and a half. We don't need CPI to tell us this. Anybody who visits the grocery store can tell you that their grocery bill has increased over the last year, especially for those who eat meat. I think beef being one of those big components that has gone up. I use an example, corn on the cob, which may seem, I don't know, but I live out in the country and corn on the cob is a big thing. And I've seen the price rise to $8 to $10 a dozen this year. And I can vividly remember paying $4 or $5. And it may not seem like a lot, but to me, I think that's a pretty big indicator of kind of what's going on in this world. Another example, the toilet paper craze, which isn't necessarily an example regarding inflation, but to me is more of a remark on, the mad world that we currently live in. And it was crazy last year when there was the run on toilet paper. For anybody who has done any type of renovations over the last year, that the lumber prices have risen. Costs have gone through the roof. Another good example is used vehicles. Surprisingly, used vehicles over the last year and a half have trended upwards, which is, very odd. Usually with time, used vehicles go down. So clearly the cost of living has gone up, and it begs the question, why and why so rapidly? In my view, the mainstream media or the narrative is centered around monetary inflation. Basically, or simply put, it's QE and low interest rates which have caused, the prices to rise. And I think this is probably at least partially true. But with that said, in my view, I think the COVID-19 pandemic, the lockdowns are one of the main proponents to why we saw, prices rise sharply due to supply destruction. A few examples, we can start with oil, probably one of the best. Early on last year, we saw the oil price actually drop. In fact, it went negative. In the image you can see on the slide, there's a picture of the oil tankers lining up along the coast. I believe this is off the coast of California. And, due to the lockdowns, the oil demand went, down the toilet. And therefore, there was an oversupply. And the price went negative. And it was a truly historic moment, I think. Well, I shouldn't say we'll never see it again, but who knows? Further, if you look at meat prices, specifically in Canada, we saw a number of meat packing plants impacted by the COVID lockdowns. They closed down and thus, played havoc with supply. Additionally, new car manufacturing, specifically in the States, had issues with not only the COVID pandemic and outbreaks, but also don't forget they were asked to build ventilators for a portion of the initial part of the pandemic, which of course constrained new car supply and then pushed the market towards used vehicles, not only because of price, but probably mainly because of availability. In particular, I was in the market for a truck last year, and I was paying close attention, and I can tell you that used truck prices went up quite a bit. And, this flows in with the push for construction. It's kind of interesting how that all plays together. So the other thing that it's done, of course, is pushed up real estate prices. There was a cause of city dwellers, that were pushed out into the suburbs or chose to go into the suburbs, especially those who lived in condos. They had a more appreciation for space. Their move out into the country, at least, where I live, push prices, they probably essentially doubled, which is a big deal. Not only this, we saw a huge push on renovations. People wanted to make their homes more comfortable to live in. So you saw, updates to their kitchens, bathrooms, entertainment rooms, outdoor living. All of these things kind of coincided to push home values up, but also constrain supply. The appreciation in the real estate prices is especially concerning considering the amount of debt in the market, at this point. And I think it's something that everybody needs to watch, moving forward. In my view, to kind of gauge where the market might be headed in the future, I think you need to try to guess what percentage or what portion of the inflation was due to monetary reasons and what portion was due to COVID. I would suggest that if a larger portion is due to COVID and lockdowns, that we could at some point see a reversal in price. But this is provided that we don't see any further lockdowns in the future. The stuff that's been going on in the Southern Hemisphere, mainly Australia, makes this fall, particularly concerning. So, when it comes down to it, you be the judge. Will people have more fear to spend or more fear to save? I define the fear to spend as a consumer's belief that things will get worse in the future. They may lose their job or suffer a drop in income and thus choose to save instead of spend. And vice versa, fear to save to me is defined as a consumer's belief that prices will continue to rise into the future. And therefore, they'll spend their savings or disposable income to front run price appreciation. Ultimately, whatever propensity you think a consumer is going to have, I think will be an indication of where prices are headed. In my view, it's the velocity of money which will dictate the rate of inflation in the future. So now we move on to alternative investments. Cryptocurrencies, mainly Bitcoin, was a huge thing over the last year. And I think it's definitely captured, investors' attention. If you look at the two graphs on the screen, the gold price has fallen roughly 17% from high to low. And conversely, Bitcoin has risen over 400% in the same time period, high to low. I think without a doubt, Bitcoin has attracted some of the investors that may have otherwise been attracted to gold. And, it's created this cult-like following. Like if you look at social media, Twitter, there's people with red eyes, and this odd behavior is characteristic of this cult behavior. And really it's captivated the attention of many investors, in my view. And the other thing is, I think Bitcoin captured a lot of those $600 checks that were given by the US government in the early part of the year. Moving on to the broader market, you're looking at a graph of the Dow Jones. The broader market has continued to see all-time highs, and we've seen the phenomenon, the GameStop and AMC short squeeze phenomenon. Again, another thing that has attracted those $600 stimulus checks, I think anyways. FANG stocks and Tesla continue to be large parts of people's portfolios. And, things just continue upwards. And so it begs the question, when will the market top out? And again, I don't have any idea, but I think that this fall should be very interesting considering the other stuff we've discussed. If we do see the Delta variant spread and, come the fall during, cold and flu season, we might be in store for another lockdown in the Northern Hemisphere. And I think this could play havoc to the market at this point. Inflation, deflation, or alternative investments, there's a lot on the minds of investors these days. The uncertainty about the future and the correction in the gold market after last year's performance, I think, has stagnated interest in gold, most specifically the equities. You can see GDXJ has fallen by roughly 37% over the last year. In my view, the poor sentiment in gold will continue until there's a definitive move in the gold price, which I think will coincide with either inflation or deflation kind of taking control of the market. In my view, the gold thesis works in either scenario. In the inflation scenario, dollars lose their value versus real assets, which is obviously good for gold. In the deflationary scenario, dollars increase in value. And this is actually a big issue because of the amount of debt in the financial system. And it is my guess that governments and central banks won't let this happen, and they'll try to stave it off with everything they've got. And what that means is probably further QE and extended low interest rates, maybe negative interest rates in North America. In the end, this stuff doesn't end, and I think that is good for gold. The fact remains that we could be in this uncertain market for the foreseeable future. The uncertainty is something we're going to have to be something we deal with. So how do we profit in an uncertain market? And for me, the process never really changes. I want to buy companies that are selling for less than their worth, that are run by good people, and have catalysts that, if successful, will see their true value recognized by the market. This process is most applicable to developers, producers, or royalty companies that have intrinsic value, based on a resource estimate or production or cash flows. However, I do think the price to value ratio can be applied to a certain extent to exploration companies, but of course it's a bit more abstract and there's more risk. Although there's more risk, I do think, given stringent criteria and a smaller allocation in your portfolio, that exploration companies are definitely a must have for anyone's portfolio. In the junior stock review premium portfolio, we cover 17 companies. Of those 17 companies, 5 are exploration companies. And today I wanted to give you some criteria that I use to pick them. So first and foremost, with any company, especially in the junior sector, you're going to want to look at the people first. But I think most of all with exploration, in particular, the valuation of any of these companies is going to be at least partially based off who's running the company and, of course, their past history. If they've made a discovery, that ability to apply their technical knowledge and make a discovery is huge on a resume, and usually will dictate, the valuation, or at least partial valuation of a junior. I like to see a systematic approach to exploration and the ability for the management team to articulate that vision and how they're going to go about it, how they're going to plan their generative work, geological mapping, geophysics, geochemical, what they're looking for, and how that will adjust how they move in their exploration process. I like to see the technical acumen fits their type of exploration, finding the right people for the right job. Good exploration work requires multifaceted expertise. And I put an example, gold and till sampling is intricate work. The right people need to take, handle, and examine the samples. From a number of geologists that I respect a lot have made this remark to me and told me to make sure that if I'm ever looking at a company, to ensure that they have some specialty company looking at these till samples, because they are so intricate, and there's a specialty to it. And finally, access to capital. Money follows success. So when you're looking at a company, if you can see strategic holders or what fund is investing in an exploration company early on, a lot of that tells you about how successful these people are and how reliable they might be in the future as custodians of your capital. Second is the project. Good people choose good projects. So if you get the first point right, most likely they're going to set you up in the right projects. I personally like to see large land packages. I used a number, plus 10,000 hectares. I think it's really important to make sure that you have a large land package, give you the best chance to make a discovery. Good geology. These guys are exploring in the right age of rocks, high alteration or structures, large deep tapping faults, and proximity to other large known mineral systems. And a point that kind of goes with both of these is that the property has seen little to no drilling. I think that's a big mark for all investors to kind of take heed of, especially in this new gold cycle. You're going to see a lot of projects recycled from previous cycles that really have produced nothing. And so be very wary of that. If you're a little bit later to the story, obviously you want to look for big target sizes. And for me, I personally prefer geochemical anomalies to geophysical. And the best would be the coincide of both. So a nice big geochemical anomaly that aligns well with the geophysics would be much preferred. The project should be located in a jurisdiction that matches the management's expertise. And I make the comment, experience should be a plus, not a question mark. If they've done 20 years of exploration work in the Abitibi, I think that it should raise questions if they've moved into Ghana in West Africa to pursue exploration. And the second point there is the ability to attain and maintain social license. After you've spent 20 years exploring or doing, mining related work in one jurisdiction, I think it's pretty good assumption that you know how to attain and maintain social license from the local communities. And I think that's a huge part of being a successful miner in the world that we currently live in. And if you want to reduce your risk, make the comment that I think a prospect generator model is a good example of how investors that are less risk but want to have exploration upside can pursue. So you do lose upside, but you reduce downside, which is a big thing. Personally, I like the hybrid models, and the company Kenorland today is basically a hybrid model. And I've actually got more of them inside the junior stock premium portfolio. Third is pretty straightforward, good share structure and low G&A. When you find good people, you want to get in as early as possible. You want tight share structures. Good results can be explosive with tight share structures. And of course, the G&A portion, you want the vast majority of money to be put into the ground, not into management's pockets or, fluffy promotion. So those are the baseline aspects. Finally, the company that's going to be presenting after me, this is just my own look at them. Kenorland, market cap around 30 million, good people headed by Zach Flood. and Executive VP Exploration, Francis McDonald. They have a great group of guys that have specialties in geophysics and the different aspects of exploration. Strategic shareholders, they own 51% of the company. Their average share price might be lower than ours, but you can see by owning 50% of the company, their interests are aligned with ours. Big individual shareholders, John Tugganetti, Paul Stevens, Peter Meredith, great roster of investors, tight share structure, under 50 million shares out. And they've had successful application of their exploration process, which is a huge thing. There were no discovery at Frotet, 29 meters of 8.5 grams per ton gold, excellent hit. And it was, a grassroots discovery. And they've got a suite of projects in Canada and the US. They run a hybrid model. Frotet is a JV with Sumitomo, and their other big project, Healy, is a JV with Newmont. So this is a company I really like. In the end, be picky. There are not nearly enough good companies out there, so keep your standards high. And if you're interested in Junior Stock Review Premium, please follow the link, juniorstockreview.com/premium subscription, or you can email me at juniorstockreview@gmail.com. Thanks.
Right on time, Brian. Appreciate that. Great presentation. As always, we have Zach here. Obviously, he must be blushing from all the good words he said about the deal. I actually came on the placement as well. I think I told you as well through Haywood. So I do like the deal. Just quickly introducing Zach's background. He's on the line already. Zach is an experienced geo who's managed exploration in countries around the world, including Mongolia, China, DRC, Peru, Argentina, Canada, US in the past 15 years. So it's a very young, successful geo and leader. Mr. Flood co-founded Kenorland Minerals in 2016. Project finding Kenorland, he spent a number of years with Ivanhoe Group, undertaking project generation worldwide, along with evaluating M&A opportunities in the mining sector. So Kenorland is kind of the culmination of all that. So Zach, can you hear us okay? Are you on?
Yeah, sorry about that.
Okay, no problem. You're on. The screen's yours.
Sounds good. Thank you very much, Jerry, for hosting this. And thanks a lot, Brian, for inviting me to give a talk on Kenorland here. All right, let me just get the full screen going. All right, so I think, Brian really hit the nail on the head with some of his criteria there to look for in a strong junior exploration company. And I'm going to kind of go through and communicate what our strengths are, and then obviously the assets that we're focusing on to date. We've been doing a huge amount of exploration this summer. This presentation's from July. We haven't had any time to really update anything. We do expect an update to come out in the next week or two here, just to provide some more color on the exploration projects that are underway right now. But yeah, first, there will be some forward-looking statements here as a disclaimer. We'll run through the people involved pretty quickly. So myself, I'm a geologist by trade here. I've been working in the business my entire life. My father was also, he spent a long time in the Ivanhoe Group. He formed into China Goldfields with Robert Friedland, originally in the 90s. So I've been around mineral exploration since I was a young kid, really. In 2016, I had spent a number of years in the Ivanhoe Group doing business development there, project evaluation. I stepped away from that to start Kenorland Minerals in 2016. With the co-founders Francis McDonald, who's the executive vice president of exploration, and Francis was working with Newmont for about 8 years prior to starting this company. Then there was Scott Smits, he's the chief geologist. He was with Newmont for about 8 years as well. And then Dave Stevenson, who's a chief geophysicist. He was working with myself with a number of juniors in North America and South America, and then ended up doing his PhD at University of Western Australia at the Center of Exploration Targeting. All of us actually worked together at Hope Bay and none of it in around 2007, 2008. So that's how we all knew each other. So when we started the company, the plan was to stay private for as long as we could and try to build value in the portfolio, kind of leveraging that project generation model. So, come up with really kind of large scale concepts, stake big land packages, present exploration plans to other majors and get them to fund. And ideally we'd be managing the exploration, which brings in a revenue stream, which really helped us keep our dilution down. So we executed really well on that model for about 4 years. And then in the 5th year, in 2020 there, we made a discovery in northern Quebec, which I'll talk about, with our joint venture partner, Sumitomo Metal Mining. And I'll get into the detail of how we made that discovery, because it's a pretty cool story. The other members on the board here with me, Rick Trotman, he's the president and CEO of Barksdale Resources. Before he joined Barksdale, he was with Resource Capital Funds. Jamie Levy, based out of Toronto, he's the president and CEO of Generation Mining. Previous to that, he was with Pine Point Mining, which was acquired by Cisco Metals. Jay Suture is a well-known natural resource or lawyer and securities lawyer based here in Vancouver. And Jessica Van Den Akker is the CFO of Core Mining, which is a development company with a project in California there. And then Peter Meredith, who is currently a director of Ivanhoe Mines and longtime director there, was a director with Kenorland for about 5 years, and now he's an advisor to the board. So looking at kind of the pillars of Kenorland here, so the team, obviously we're a very dedicated, diverse team of geologists and geoscientists with global exploration experience. I believe we have a really deep understanding of mineral systems and the exploration science that drives discoveries. We have a very strong network within the industry, both on the mining side, but also in the capital markets. And our vision when we created this company was really to become a leader in the space. We saw a lot of inefficiencies in the junior markets, which is why we stayed private for so long, sort of honing our asset portfolio and our skills and our approach before going public in earlier this year, actually. So this year we started trading on the Toronto Venture Exchange under the symbol KLD, and just recently got our OTC listing as well. But in order to build value, we sort of took a risk mitigated approach. This is a hybrid model that Brian was just talking about. So, some of our projects, we'll try to bring in specifically major mining companies who understand the kind of multi-year exploration strategy that it takes to be successful in exploration. Other projects, are more opportunistic. We'll stake something if it's open ground. We'll vend the whole thing for a large equity position and royalties, which we've done. And then some projects where the target looks attractive enough, we are willing to take the shot. So this year, we're drilling a project up in Alaska called Healy in the Goodpaster district that we've optioned from Newmont. So that's a little bit different than than strictly a project generator. So our approach really is to identify underexplored areas within proven mineral districts. So a lot of what Brian said too, you got to be in the right geology, the right rocks, big structures within proximity to other major mineral systems. Ideally, we're looking in areas that are undercover. If anything was sticking out of the ground in the past, there's a good chance it would already have been discovered. We'd like to acquire very large land positions. So most of our projects are 50,000 hectares plus. We have over 400,000 hectares of mineral tenure, which is over 1 million acres of ground between Alaska, Quebec, and Ontario. So these are really large scale projects, and we prefer to carry out large scale systematic exploration to screen these properties before focusing in on any one target. So it's really important, once you do have that large land package, to narrow into the best target possible on that before proceeding to the next stage of exploration. So this year we started out very well funded. We had 9.5 million cash in the treasury. Today, I think we have about 5 million working capital, as we've been spending a lot of it in the ground this year. We're well positioned, as I mentioned, with over 400,000 hectares of mineral tenure. We have one earn-in agreement with Sumitomo Metal Mining. We have a joint venture with Sumitomo Metal Mining on another project in Quebec. And we have another project that is optioned out to Newmont Corporation in Quebec as well. So all three of those agreements are in Quebec, and we're managing all three of those projects as well, which brings in a significant amount of revenue through management fees. We have about $2 million coming in to the till this year through those fees. So it's definitely material. The opportunity, obviously, for investors are we're really looking at the drill bit, and that's what can really make a material change in a company's valuation. There's over 7 million of sole funded exploration going into the ground this year. There's 10 million partner funded, so there's 17 million dollars Canadian going into the ground on multiple projects across North America this year. So again, a huge amount of exploration. We've been really busy this summer, especially. We're drilling 2 of these projects. So Frotet in Quebec, where we made the discovery with Sumitomo, which I'll talk about, and then Healy up in Alaska, which is the maiden diamond drill program on a very large gold system that's never seen any drilling on it, any diamond drilling. I'll talk a little bit about that. And then we have this in our portfolio. It's really important we keep this pipeline of additional projects kind of coming through. They usually start as greenfields projects, but you screen them on the first pass kind of regionally, and then narrow into targets, and soon you'll advance it to the drill stage. And of course, we have everything from a known porphyry system that was discovered in the 70s up in Alaska that has a lot of brownfield potential kind of around that system. We have a brand new discovery in Quebec that's on its kind of 3rd pass drill program. We have, another project up in Alaska that I mentioned, Healy, that's on its 1st diamond drill program. And then we have a pipeline that's basically being worked up to drill stage, or even seeing the first pass of kind of systematic geochemical sampling at the project scale. So that's always been kind of the model, is to kind of continually feed new projects into that pipeline, and exploration at the end of the day is a bit of a numbers game. You do need to, turn over as many rocks as possible and sample as much ground as possible, and eventually drill as many targets as possible to provide your investors with, the best opportunity for discovery. So that's a lot on the kind of pillars there of Kenorland. I'll zip through the share structure here. There's 46 million shares out, 56 fully diluted. I guess another key point on this slide is the share ownership. 51% is owned by management and insiders. Institutional ownership sits at around 11%. Close associates is about 15%. So it's other high net worth individuals who've been supporting the story for multiple years. And then retail sits at about 23%. A lot of that came in on the last financing that we did, which was concurrent with the RTO, and that was at $1 per share. So today we're trading about 76 cents, so well below that last issue. And of course, therein lies an opportunity for people to join the story at all-time lows. The high we hit this year was about $1.32 after we released the last drill results from Renault, which is the gold discovery we made in Quebec, and that was from a drill program in the spring. So we're carrying out another very significant drill program there, following up on that. So I expect a huge amount of results to be coming out in the fall here. So it's a good time to join the story. All right, I'll just kind of breeze over our project locations. So, we're focused in North America in districts that have huge metal endowment, both in terms of copper and gold. Mostly focused on gold, although we do have a lot of copper exposure in Alaska. We have a advanced stage porphyry copper system. It's a gold-rich porphyry in eastern Alaska called Tanacross. We have the Healy project, which is located in the Goodpaster district near Pogo. That is optioned from Newmont. And then in Quebec, we have our other kind of flagship, which is the joint venture with Sumitomo Metal Mining called Frotet. The Chibousaman project is just south of that in the northern Abitibi. That's optioned to Newmont. If you go south of that, we've got the O'Sullivan project, sits right next to Cartier's Benoit project in the Abitibi there. And then south of that, as you go into the southern Abitibi, we have the Jacoby project, which is also optioned to Sumitomo Metal Mining. And then near the border of Ontario in the southern Abitibi, we have the Hunter project, which is 100% owned. And then over in Ontario, in the Red Lake district in northwestern Ontario, we have the South Uchi project, located in the southern Birch Uchi Greenstone belt there. That was just the most recently acquired project, which we acquired through staking and some prospector type deals. So All of these are seeing exploration this year at various stages and scales, but they're all being worked. Up here in Alaska, we have the Healy project, 4,000. We've actually upped that to 5,000 meter maiden diamond drill program. So you can see Pogo sits right there in the good pasture. There's only about 4 landholders up here, us included, with a project that's about 18,000 hectares there. If you go over to eastern Alaska, which is more kind of in the, along the Big Creek Fault system, which controls the placement of some big mineral systems like Free Gold, Casino, Coffee. That comes up into Alaska and I think has something to do with the occurrence of the Taurus porphyry system, which is kind of a historically known porphyry system, but we staked and acquired about 40,000 hectares around that. With that being the core now of the property, and have done a lot of regional exploration. So we continue to work up drill targets on the property. So this year we're doing a huge amount of soil sampling, mapping, drone magnetics, and a Titan IP survey on specifically one of the targets just south of the 2 known porphyry centers there. And then in Quebec here, we have the Frotep project. It's an 80-20 joint venture with Sumitomo. So Q1, we had the 8,500 meter diamond drill program. That's completed. Off of those results, again, we saw the share price go up to $1.32. We're following that up with a 20,000 meter diamond drill program, or up to 20,000 meters. That's about halfway through right now. And we're also completing a large amount of surface work on regional target areas, so mostly till geochemistry and IP. The Shabistawan project, earlier this year, we did complete our follow-up geochemical survey. So last year, Newmont funded a property-wide till sampling program, which covered the entire 160,000 hectare property. This is about 100 kilometers from end to end, covering a major deformation zone in the northern Abitibi. So it's a massive land package. And we did complete a property-wide till survey last year. This year, we followed up on that, and we expect to follow up with a big prospecting campaign in the areas of interest where we've defined anomalism this fall. And the O'Sullivan project, we do plan to do a bit of follow-up geochemical sampling there in the fall. The Jacoby project, which is optioned to Sumitomo. So Q1, we completed the phase 3 sonic drill for till program. So that's the culmination of about 2 years of doing sonic drilling there, taking that 50,000 hectare property from regional screening down to a specific target area where we have a coherent golden till anomaly and other multi-element anomaly there. So we are preparing to follow up with detailed geophysics expected in Q3 or Q4 this year, and then tentatively diamond drilling on this, which would be the maiden diamond drill program on this target in most likely Q1 2022. That's contingent on Sumitomo's approval, of course. The Hunter project, we completed 5 sonic drill for till holes to confirm some historical results. This is just north of the 5 million ounce Du Parquet. And then we just completed a 1,000 line kilometer property-wide airborne VTEM survey. So the target there is gold-rich VMS. There's thick overburden. So really that's what we're exploring for. We're looking for conductors that could be related to those volcanogenic massive sulfide systems. I'm going to now walk through how we made a greenfields discovery in northern Quebec, only 5 kilometers off the route to Nord, which was, I didn't think a lot of people didn't expect this to happen, I don't think, because the belt up here in the Frotep Evans has historically been thought to have been pretty well prospected, ever since the 70s and 80s, probably way back before then as well. But sure enough, if you complete work in a systematic and diligent way, covering a big enough area, then there's definitely possibilities for new discoveries like this. So in 2017, we staked 56,000 hectares of greenstone belt. The Frotep Evans belt does have some serious endowment. It's got the Troilus deposit up here. It's about 7 million ounces total gold endowment in that. So we know that the belt has the potential to produce a multi-million ounce system. We were private at the time with, shoestring budget, really kind of bootstrapping the company. So we optioned it to Sumitomo in 2018. We completed systematic till sampling in 2018 and 2019. So we took over 6,000 samples covering the entire 56,000 hectare land package. And then, as you can see here, this is all the gold and till results. And then there was a large gold and till anomaly in the southern end of the belt. It covers about it's about a 5 kilometer trend down there in really anomalous gold and till. And then we followed up with the first drill program in March of 2020, where we hit that 29 meters at 8.5 grams on the first drill program. And then Q1 of this year, we really started to get a hang of what the geologic controls were here. We defined a couple vein corridors, and on the R1 vein, we hit 90.56 grams per ton gold over 5.72 meters. So the system has really, really high gold grades. You know, it's so far it's a typical kind of narrow vein, orogenic narrow vein system, but the grades we're seeing are quite spectacular. So that's really encouraging. And then we have some other target areas that we're going to be completing, or that we have completed surface work on, and then we'll follow up with geophysics. But that's Cressida, which is along trend of Troilus, Lafourche up here, and then Chantillon there. So there's a lot happening on the Frotep project. I'm just going to walk through a few slides to demonstrate this is kind of how we made the discovery. So there's a 5 kilometer gold and till dispersion plume. You can see the route to Nord right here. So there's like logging roads that go right over top of this, but somehow no one ever found any boulders. Like we digitized all the assessment reports here. There's no indications that anyone had ever found any mineralization up here. There's no outcrop either. So this was a completely blind discovery. So we followed up that till anomaly to the head here. We completed magnetic surveys, IP surveys before drilling. You can see in the magnetics here, there's a big east-west deformation zone which rips right through it. The yellow outline is our diorite, which is it's an intrusive complex really that sits in the volcanics, and that is probably what's providing, you know, it's a hard, competent rock that will crack when you try to shear it, whereas the volcanics will kind of smear, that rock will crack, and that could be the reason we're seeing the veins forming within the diorite. So it's a big diorite intrusive complex. It's about 2 kilometers end to end, which is about how far we see the mineralization to date. So it's got a big footprint. The veins are trending east-west within that 2 kilometers, which is really interesting because it's potential to really kind of build a lot of strike length on these veins if we find more of them, which I think we will be. So that's what the drilling looks like there. This is the geologic map. So it's pretty rough still, but again, volcanics, and then you have your diorite in the middle there.
Hey, Susa, it means like Zach, we're running a little short on time, but there's a question on KLD and involvements with PRC. Can you maybe just go over that question really quickly? Involvement of PRC with the Kenorland?
Yeah, so that news was announced yesterday. PRC is one of kind of the satellite projects that Kenorland has. We have a lot of equity interests in other companies. It's part of our model is to kind of incubate new companies and you know, build equity positions in those. So PRC is a private company owned by Kenorland Minerals, Tim Young, who's a mining entrepreneur, and Bill Rand, who's a very well-known lawyer who works in the Lundin Group. And we got together and we're leveraging basically Kenorland's ability to digitize a huge amount of spatial data. So we have a team in Europe that's been working with us since inception of the company, really for the last 4 years, digitizing geochemical data. And now we've kind of, now we're starting to use them to digitize royalty spatial extents. So instead of a claim map, we'll have a royalty map. So we've started with, one province in particular, and we'll build this database. We have been building this database as a kind of in-house proprietary data set to identify royalties, and then using our geologic, knowledge and data sets as well to identify targets for potential acquisition. And then Tim Young is a very well-known, or he's very experienced in terms of negotiating royalty agreements and purchasing and selling royalties. So he's really taken over the business side of things. And then GRC provided an equity investment of $2 million, which they announced yesterday, into PRC. And that has created a business combination there where we will be, working with them and providing them with opportunities to purchase royalties out of our own stable. So that's
excellent. Okay, sounds like things are going the right way. First day of September, and hopefully the summer ending of summer doldrum. I'm an investor as well through Haywood and Canaccord, so happy to see that. Hopefully we're clawing back closer to $1 range. But appreciate the great update, Zach. We'll need to get the deck to a few of the investors. Next panelist, thanks for that, Zach. We have a next panelist coming up. His name is Justin Huhn. He runs Uranium Insider. The uranium sector, in his opinion, offers the most asymmetrical risk reward profile he's seen in the entire career. I want to talk a little bit about the uranium sector too. Take it away, Justin.
Thanks so much, Jerry. You guys see and hear me okay? Awesome. All right, I have a slideshow to share, and I'm going to have to really fly through it because I know I only have 20 minutes, or maybe even slightly less than that. Really quick intro. My name is Justin Huhn. I've been deep into the sector for about 5 years. I write and I'm the founder and publisher of the Uranium Insider Pro newsletter. Been doing that for a little over 2 years. I have a small team of very experienced resource investors supporting me. Thus far, we've done extremely well in the uranium sector. We're up about 350% since inception. We've done more than 3x of the ETFs, and we're very proud of our track record. We eat, sleep, and breathe this stuff, uranium, all day, every day, and we have a really great supportive member base that's growing by the day. So that's a little bit about me. I could go deeper into that, but like I said, I've got to fly through this. So let's get started. So first of all, a lot of people don't know that nuclear is actually a growth industry. It's an industry that's set to grow between 1% and 3% out to the end of this decade, and has projected even faster growth than that in the 2030s. It's increasingly important as concerns are increasing with carbon neutrality, carbon emissions, global warming, et cetera. And it's finally getting a little bit of attention in that realm, that it's been an obvious solution to some of us for many years. And finally, a lot of the world is coming around to the realization that it is a solution for clean energy. There's 54 reactors under construction currently. There's 100 planned and 325 proposed globally. It's quite the growth story. One of the growth stories, along with nuclear in general, is the emergence of SMRs, or small modular reactors. These are new designs. These are reactors that run, anywhere from 50 up to, let's say, 350 megawatts. They are, as opposed to, around 1,000 megawatts, let's say the average large reactor. They are much cheaper to build. They are modular. They can be built in a factory and delivered and assembled on site. They can be strung together to produce more energy, and they can be implemented into much smaller electrical grids. So the use case for these is huge. And the first one is set to be constructed, or the construction is to start within a couple of years in Wyoming. First one in the States, I should say, by NuScale, a company founded by Bill Gates. And their natrium reactor is set to be implemented at a former coal power plant site and plugged right into the grid that's already existing, connected to that former coal site. Really exciting technology. This is a story that's not really baked into the existing investing framework for uranium, but it's kind of a gravy on top, let's say, looking out towards the end of the decade. And this first reactor I just mentioned, Wyoming, could be up and running by 2026. Again, the uranium market has entered a multi-year structural supply deficit. This is a growth story, not only for nuclear energy, but for uranium, the commodity, which is what we're investing in, or more importantly, more specifically, the miners that are mining and producing uranium as a fuel for nuclear energy. This is the nuclear fuel report that was put out by the World Nuclear Association 2 years ago. An updated report will come out within the next 30 days. And we're excited to see that. We believe that it's going to show a similar growth, a similar deficit between supply and demand, especially out at the end of the decade. Nuclear moves very slowly in all ways. So when you see a deficit that starts, the deficit exists currently. We've got about a 50 million pound deficit currently this year structurally between produced uranium and consumed uranium globally. But when you see that it really starts to take off 2024, 2025, and doesn't really turn back from there, 2025 is tomorrow in terms of the nuclear industry. And so it takes so long and it's so difficult to get new supply to come online that the nuclear utilities, they think in terms of half to full decades when it comes to securing uranium supply. One of the main theses for this investment is the flawed expectations that are assumed by many when it comes to nuclear and uranium. One is that planned reactor life is set in stone. It is not. A lot of times you have a reactor that's set to operate for 40 to 60 years. It'll get an extension to 80. There's already discussions about extending some reactors in the States beyond 80 years out to 100 years when the time comes. That is, and we're seeing that all over. We saw that earlier this year in France. All of EDF's plants, which is the majority of the plants in the country of France, France is 70+% nuclear. They extended for another 10 years, and they review that every 10 years. We're seeing that all over. And Japan as well. Japan shut down all of their reactors following Fukushima. They now have restarted 11, I believe. And if they are to meet their carbon goals, they'll be restarting another dozen or so in the next few years. We aren't even actually betting on that. That's not even really part of the thesis, but it's happening. Mine development timeline, permitting capital, development and production. This takes a very, very long time in most jurisdictions with most types of mines. In some cases, let's say in Kazakhstan, Uzbekistan, these are ISR mines, they can come on faster with less bureaucratic red tape, let's say, to get those mines producing. But with classic underground mines, open pit mines, these take many, many years, if not decades, to go from discovery to production. So when you look at these supply demand forecasts, even like the one to the right of the screen from WNA's fuel report, none of this is set in stone. There's no guarantee that any of this planned supply comes online, and we need the price to support it to begin with. This is a quote from the director of Kazatomprom, the largest producer of uranium in the world currently. By 2030, the market will need new production equivalent to 2 additional Kazatomproms to fill the expected gap between supply and demand. Kazatomprom currently produces almost 60 million pounds per year. They're an absolute monster in the uranium space. And this is the director of Kazatomprom saying, by the end of the decade, we need 2 more of us to fill the gap that we're expecting to see between supply and demand. It's just huge. Expectations that ramping production and care and maintenance mines restarts will balance the market. You can see that the market begins to possibly balance 2024 by that graph. That's assuming that we have the price to support idled capacity to come back online. Those are some big assumptions. We're starting to see some pretty aggressive moves in the price right now, so I can talk about that briefly in a minute. But to expect that the current producers can ramp their production to meet these demands is a false expectation, in our opinion. And then that secondary supply will remain consistent. We have about 20 to 25 million pounds a year that come in from secondary supply. This is primarily from re-enrichment of tails material and from underfeeding the enrichment process. And this is not expected to stay consistent because we expect that demand for enrichment will grow and that excess capacity to produce that secondary supply will diminish. We've already started to see that happen. Like I said, Kazatomprom, the largest producer in the world, they've been very, very disciplined in their production. They have what's called subsoil use agreements with the state that they are allowed to go 20% below or 20% above those agreed production levels on an annual basis. And they have gone 20% below for 3 years in a row. And they've just, it's not, you don't see it on the screen here, but they've just guided for 2023 that they're saying they will not be ramping up production even out to 2023, that they, quote, are not seeing the signals from the market, unquote. We believe that there's other factors at play, primarily high grading, that are affecting this discipline, but needless to say, they are showing a lot of discipline. So a lot of the fears around Kazatomprom ramping to kill the market, I think, are completely unfounded. Cameco as well, they've been very disciplined, at least in the past few years, shutting down their largest mine in the world, McArthur River. They shut down in 2018. Cigar Lake has come offline twice in the past 18 months, both due to COVID. And they have, between their shutdown mines and the buying they've done in the market, it's had more than 100 million pound effect since 2018, which is absolutely huge. Cap through 2023. So I'm going to fly through this part because it's very detailed and I don't have the time to go into it. ESG climate imperative. Like I mentioned, finally nuclear and uranium alongside with nuclear are getting the attention they deserve. This is the CO2 equivalent per kilowatt hour produced by energy source. You can see that nuclear is even lower than hydro, even lower than concentrated solar, even lower than rooftop solar, geothermal, etc. It's very low carbon and it's base load. It's just and by far, it's the safest form of energy that's ever been conceived in terms of lives lost per kilowatt hour produced. We're seeing corporations adopt ESG frameworks in response to this managed investment criteria. So basically what we're seeing, companies are getting pressure from their investors to be responsible from the source of power that they are purchasing to fund their operations. Frailty of renewables, yeah, so solar and wind, they're not base load. They have their place in an energy grid, in my opinion, but it's a minority share of the grid. We don't have grid scale storage yet. There's definitely technologies working on that, but it's just not there. So when the wind is not blowing, when the sun is not shining, we have to have base load power to stabilize the grid. And Germany is one example of that. They shut down more than half their reactors after Fukushima. They went all out solar and wind. They now have some of the worst air pollution in Europe. They have 3 times the cost of energy than France. And they have they've had to cut down old growth forests to mine coal. They've had to ramp their coal production, their coal burning power production, and biomass as well, which has really not been great for the air quality or for the citizens of Germany. And we're just starting to see the beginnings of a disposal waste crisis with spent solar panels, which have a lot of heavy metals in them. This term, electron accountability, was coined by the guys at Cameco. It's basically, like I mentioned before, being accountable for the energy that you're using for your operations. Bloomberg put out a piece in January of this year saying that they expect ESG assets could hit 53 trillion by 2025, which I believe is expected to be about 1/3 of all invested assets. If uranium and nuclear get even a tiny slice of that, it's major growth, as the publicly traded uranium sector currently is about $30 billion, which is just absolutely tiny. This is really the big story right now. How am I doing on time?
I would say we'll get about 5-7 minutes.
Okay,
Yeah,
here we go. I'm almost done. I think I can do it in 5.
Perfect.
This is the big story now, the financialization of the uranium market. This is something we've been expecting for years, especially in December when it kind of started. We started hearing whispers about hedge funds moving into the space, buying physical uranium. This happened in the previous bull market, and it's happening now, and it's happening like never before. UPC started this, Uranium Participation Corporation, in 2005. That really lit the fire to the previous bull market, was when utilities recognized that financial players were coming into the space. In 2021, this has been accelerated. Pre-production companies, these are companies that are not actually mining any uranium, purchased 13 million pounds this year. Yellowcake UPC purchased 5 to 6 million. Hedge funds, including Anchorage, bought 2 million, and even family funds are scooping together cash and buying 100,000 pounds. Happened in California a couple months ago. Sprott is the big story. So the Sprott is an asset manager with 18 billion under management, 13 billion in their physical trusts. They've been working on sealing this deal by taking over UPC for 3 years, and it just went through about 6 weeks ago. They filed for an ATM financing model. They got that within 3 weeks. $300 million is the starting initial allowance. They can re-up that as it's drawn down. So far, they've drawn down about 75 million of that 300 in less than 2 weeks. We're talking 10 trading days. They've purchased 2.3 million pounds in 10 trading days. To put that in perspective, if they were to keep up that pace, they would consume more uranium from the spot market than the entire country of the United States consumes in their entire reactor fleet on an annual basis. This is an unbelievably huge development, and we've been saying that as soon as we heard the news came out in April, that this is going to change the market, and it already is. Okay, what do you need to know if you're investing in uranium? Maintain a multi-year perspective. This is not an overnight trade. This is a very, very volatile market that is very difficult to trade in and out of. When it moves fast. The equities have moved up 20 to 30% in the past 3 days. It just flies when it goes. And you have to be able to stomach the volatility and invest only in what you're able to handle the volatility. Whatever you're willing to lose, essentially, and you can sleep at night with the moves. You have to understand that these outsized returns that uranium investors and resource speculators in general expect, you can't have those returns without that volatility. You have to know what you're getting into. The long-term bullish thesis for the price of uranium, the average cost to produce of the marginal production in the world is about $60 to $70 a pound, and currently we're at $35 a pound. So the basic thesis, even ignoring all of the financialization, the spot development, all of that, the basic thesis is that the cost of uranium needs to double in order to stabilize the market, and it will. Invest with experienced shareholder-friendly management teams that possess quality projects. You have to look at jurisdiction, you have to look at management's experience, you have to look at the share structure of the stock. That's very important. Most people overlook it. We look at that very closely when we choose our investments. It's very complex, soft pitch, have conviction, seek professional advice. Like I said, we live, eat, and breathe this stuff, and you really need to have a grasp of what the heck is going on in this sector in order to stick out and hang on and not be shaken out. And that's my slideshow. I'm going to stop screen sharing. I don't know if there's any Q&A or anything like that, but
yeah, we may have a few minutes. We have Paul, the next company coming up as well from Encore. Are there any Q&A for Justin before we move on to Encore's presentation? I'll just kind of leave it a minute here. Feel free to type it in the chat, just right here, or directly private message through to us, the panelists. So I got one already here. Justin, how would you define an attractive share structure?
The first thing I like to look at is the overall outstanding shares. If they're in the billions, I like to find out why. What have they done to raise to get to that number? Has it been accretive for shareholders? The second thing I like to look at is the ratio of outstanding options and warrants to those outstanding shares, because that, outstanding options and warrants, they do help to cash up the company if there's a lot of money coming into the stock, into the sector. But if it's not an absolute flood of cash coming into that stock, it's a big overhang. And some of the stocks that have a high ratio of outstanding shares and warrants that we've looked at over the past 12 months, they've definitely underperformed.
U.S. leading in-situ recovery uranium producer. It's led by a team of industry experts such as Paul himself with extensive knowledge and experience. And here to talk about the Encore today is CEO Paul.
Thank you, Jerry. I'll try to blow through this pretty fast so that everybody can get to the questions. Obviously I have to put the disclaimer up since we're a publicly traded company. A little bit about Encore. We've been around since about 2009, where, as described, we've been a uranium developer. And at the end of 2020, we were able to act on a transformational acquisition, which allowed us to take acquisition of ownership of 2 licensed uranium production facilities in South Texas, as well as a dominant land position in New Mexico to complement the position we already have. One of the things about Encore that we believe sets us apart is that we have an experienced technical team, as well as a team that's also experienced in transactional growth through mergers and acquisitions. As Justin did a great job of kind of describing the market, the uranium market, and how things work, we're focused on what's called in-situ recovery first. We have both in-situ recovery as well as conventional mines, underground, open pit type of mines. In-situ recovery is basically a process using solution recovery of uranium, where we inject water, recover the uranium out, and produce what we call yellow cake in a can. I've been doing that for over 33 years now. And so we've got a good experienced team we brought in. And as Justin went through the fundamentals of the uranium market, we see this as the time to begin to advance projects, to be a first mover, but also to grow Encore to be the predominant ISR producer in the U.S. And we're going to do that by executing on our short-term objective, which is to get into production in South Texas, and then build our portfolio through transactions, through mergers and acquisition, to allow us to have a 1 to 10-year window of production facilities. And our long-term focus is New Mexico. It's where the most significant portion of our resources lie that we have currently in our portfolio. And we're currently growing our portfolio as we are at the moment by acquiring known uranium resources to feed in South Texas to feed our ISR facilities. A little bit about the company. The this is our share structure. It varies, as you know, we're around 308. I think we closed around $318 million market cap. We have 199 million shares outstanding. You can see we got 16 million shares, warrants, 10 million options out there. Fully diluted is 225 million shares. It's about half and half retail and institutional. And on our retail side, we have a significant number of high net worth retail owners. And then management holds about 10% of the company. And as part of what we've done with our investment strategy, we've acquired 300,000 pounds of uranium as a strategic asset that would be principally to mitigate supply disruption, any kind of delays in our production profile, allow us to supply our agreements. And we do have one. We've just back in July, we announced we've signed a supply agreement to a trading company for owned by Orano that principally supplies EDF. What we see as our strength is our technical team, our management team. As you can see, I'm the CEO. I joined on October 1st. I've been in the business for a long time, 33 plus years. I've served in various executive positions, but also I've been one of the guys that also worked in the field and turned valves. So I've gotten a lot of experience in how to build, operate, and develop new projects, as well as also bring them to close. So I know exactly what needs to go to keep our footprint minimal and keep our costs low. Bill Sheriff is our executive chairman. He has quite a bit of experience in the uranium space, but he's got a lot of history doing with transactions, and in the uranium space, he's best known for the work he did with Energy Metals, building that from a small company up into through 5 mergers and acquisitions in 30 months to a company they sold for $1.8 billion to Uranium One in 2006. Also rounding out the senior management, Dennis Stover, our chief technical officer. Dennis was our CEO prior to me coming on board. We have Richard Cherry, who's an expert in markets, particularly on the nuclear fuel cycle, and others such as Mark Plizza and Bill Harris. We've also been adding to our leadership team since I came on board. We have Carrie Murphy as our CFO, and also we're building out our technical team through Doug Underhill, John Seeley, and Adrian Garcia to help us begin developing our properties that we're putting into the pipeline. So as I said, Texas is where our initial focus is. One of the things we have is that we have a dominant position in Mexico, which gives us a lot of leverage and for the future, but also just a long-term future of production and with the ability to grow to that. We have also additional pipeline properties in Wyoming, Utah, and Arizona. And one of the things we don't talk a lot about, but we do have an investment in a company called Group 11, which is developing techniques to in situ recovery, other types of metals such as gold, et cetera. So that's pretty exciting as well. Focusing on Texas, we have 4 principal properties we're developing. And those came to 3 of those came through us through the Westwater our acquisition of Westwater Uranium's U.S. uranium properties, and also in an Upper Spring Creek is something we're developing on our own based on executing on our development plan. So it gives us we're building a pipeline of projects to feed Rosita and Kingsville Dome as the central processing plant. These are going to get us into production the soonest. And we're looking at a timeline of late 2023, which is consistent with what the nuclear utilities are telling us when their inventories will be open. I've had several conversations with actual nuclear fuel buyers, and the story is all the same. Their demand is coming in that 2023-2024 period. That may be accelerated with, as Justin talked about, with the actions of Sprott, but that's kind of what we've been told. And we're focusing on Texas because it has one-stop shopping in the state. Everything goes through Austin through the same agency, so we can execute our plan. We've got the same regulatory environment that's well known, well understood, and we're already building on just beyond just these projects you see listed here. We're also adding additional pipeline projects to execute our plan. A little bit about our processing facilities we acquired. This is why I'd call this our transformational. When we acquired these properties, it's transformational because it actually put us into a position to become a near-term producer. These properties are already licensed and permitted, so we don't have to spend the time and the capital to build them out and to get them, and then the time to get them permitted and licensed. We already have that in hand. So they provide us the capacity to start up production. They have a combined capacity of about 1.6 million pounds a year, but they have the capability, infrastructures are already assembled, and with a minimal amount of cost, we can execute and develop and more than double that capacity once we decide that the demand is there. We're executing on a limited capital program to refurbish and complete the original redesign work at Rosita, and that will put that one in production capacity by end of first quarter 2022, and that cost is less than $1 million to get that work done. And then we're maintaining Kingsville Dome as it is right now, on standby with it as an option for production. And both these are designed to operate and recover uranium from resins that are sent from other remote satellite well fields. We have an existing well field at resources at Rosita, but one of the things that came with this acquisition is we have satellite capacity. So we have the ability to deploy already acquired equipment to build out satellite facilities at these remote well fields that we're currently getting in place and getting ready to construct. And those include the ones that we've put together in the Upper Spring Creek project, as well as ultimately possibly for the Butler Ranch, which is going to be a project we're drilling out. Spring Creek is a combined set of multiple projects that have been previously licensed and permitted, that were never produced, that were basically released as a result of market conditions, and so obviously they're on a short timeline to execute, to get into production. And as I mentioned, we're actively building a larger pipeline as we go along. This is our resource. We have two major projects. I'll get into more detail on that are 43101 properties, but also you can see we have a significant amount of historic resources as well. Those that are focused in Texas are going to be the ones that we go after first to increase in their resource, but also to move those from historic to 43101. And then we'll look at working on the ones in New Mexico and Arizona as well. This is what I talked about, our dominant position in New Mexico. We have, with the Westwater transaction, we effectively doubled the size of our holdings, but also we significantly increased our mineral resource endowment that came with that. New Mexico is a wonderful location to begin to develop properties. We see our Texas assets as being the ones that are going to leverage us to get to New Mexico and allow us to execute. New Mexico has a little bit more rigorous regulatory environment, which is why we're pushing that out to that 5 to 10 year window, so that we can get our homework done before we start talking about direct timelines for bringing those into production. Our first mover will be Crown Point Hosta Butte. That's an in situ recovery site location, has significant historic resources, significant 43101 resources. It is already partially permitted and licensed. It is those are currently held by a company called Laramide, but we have a good relationship with them. We expect to execute the development of these projects with Laramide as well. Marquez One Tafoya is principally a conventional mine, but it's the first. We just recently issued a preliminary economic assessment that encompassed this project as a combined project, which has never been done before. And so you can see the economics dramatically improve by combining these two projects under one roof. And so we're looking at this as a potential momentum project down the road. One of the other things we've identified that there is a portion of this ore body that appears to be amenable to in situ recovery. We intend to do some more development drilling to draw that portion of the ore body out as a means to get Marquez, Montefiore into production sooner. The rest of these projects have historic resources, are all primarily in situ recovery targets, Nose Rock, West Largo, Ambrosia Lake tree line. And what I call as our secret sauce, one of the things that's allowed us to hit the ground running after January 1st of this year was the fact that we had a large database that we've acquired over the years through various transactions. And those are familiar with the US, is that most of this information is proprietary. So we had to go out and acquire it, but we're actually exploiting it. The Upper Spring Creek project is a good example of how we're exploiting this database to kick it off. And we intend to keep leveraging that and where we can acquire more data. So a little bit about it. We've got a clear strategy to be the premier ISR producer in the US. We have strong resources, a strong team that can execute, and a good, strong resource base, as well as the immediate access to the market through our production facilities. And I'll take any questions.
Thanks for that, Paul. Great presentation. Well cashed up, great jurisdictions, and obviously a growing resource. Definitely in the right place to be. And certainly if Justin's claims and advice come to fruition, we certainly need a lot more uranium. And obviously the current prices, as we know from Forum and a few of the other presenters today, we all know the pricings make no sense for emerging producers. So prices will have to materially go higher. We'll take any questions. We'll have Robert Kientz join us for 3 o'clock, his presentation from Gold Silver Pros. But in the meantime, any questions for Encore Energy CEO Paul Goranson, please feel free to type it in the chat here or send us a note on email. Right. We have a question from David, Paul, just in regards to, I guess, a recent jump in share price. Is that more of as a result of the financing being done, the overhang being lifted off, or any sort of a main material catalyst coming up for the fall season?
Well, we haven't put out any significant news lately outside of our recent sales contract we executed. I think a lot of it has just a general sentiment of the market, the uranium market, the fact that the uranium price has moved up $3 in the last 5 business days as a result of Sprott's activities has provided more interest into the uranium market, and that's brought more interest to our company. We've had some very we had a very successful private placement back in February, but we've even moved beyond even that private placement pricing. So it's certainly been interesting to watch, and we'll see where things go from here.
Definitely. Yeah, I mean, that's exactly what you want to see on the placement side for companies. I mean, you did around at 40 cents and around at 10 oversubscribed. Your stock is trading 30-40% above that, and this is before the 4-month hold is on. So it's looking very, very good for our Power One and the guys that came in from Claris on the deal. We had a question from one of our panelists, Rob Ashley, in regards to production plans. Is Encore shifting to exploration mode from going into production mode this year? And a follow-up question to that: will Sprott uranium allow uranium to trade high enough to let these development projects get into cash flow?
So I'll start with the first question and segue into the second one.
Sure.
So we're executing on an exploration and development program simultaneously at 2 different locations. So we haven't had to do any exploration on the properties we currently have in our immediate production pipeline because there's been sufficient work to that point to where we can actually go and design and install well fields on that information. But we're also we're starting an exploration program at Butler Ranch, and we'll be adding another project into that sometime in the next couple of months, that exploration program, to be able to expand our production ability beyond just what we have currently in our production pipeline. As I mentioned, our timing is to be capable of getting into production by 2023, by mid to late 2023, so we can execute and deliver into our current contracts with produced uranium. And that's what's driving it right now. But the question is, what will the price be at the time we begin to deliver uranium into that contract, and hopefully also have built up another set of contracts, as part of our contract book. But the SPOT activity, SPOT, has really kind of changed the dynamics. We saw a similar approach back in 2005 when we started. I was part of a uranium company. We started up and started selling uranium into the spot market. But it was really the hedge funds, the financials, that really kind of kicked off that momentum of the market. I see Sprott doing the same thing now. So by the time we're ready to deliver or deliver into this market, we hope that the prices will be moving up, because not only will it be Sprott that's in the market that's buying up material, but the utilities are going to have to come in and buy material. And they're going to have to compete with Sprott to be able to get that material. So I see that as creating a kind of an incentive to that demand, or kind of a knock-on effect.
Great come back on the questions there, Paul. We look forward to seeing more Encore's presentations and catalysts in the coming quarter.
Thank you.
Yeah.
Thanks, everybody. Bye.
Yeah, thanks. Rob, you're up from Gold Silver Pro. Rob is a longtime friend of ours on the channel and with our group. He's the editor and publisher of goldsilverpros.com. It was a formerly premium subscriber digest with focus on long-term cycle investing in the precious metal market. He's also an author, published author of a 2010 book, Drop Shadow: The Truth About the Economy. Been massively featured on Yahoo Finance, Bloomberg, MarketWatch, Nasdaq.com, Seeking Alpha, which is how we originally met. He started Gold Silver Pros in 2018 after writing on several blogs for almost 10 years. The research is based on 20 years of investment experience in bonds, stock, real estate, commodities, and precious metal markets. Key concept he's learned from generation investing is recognizing bull market cycles, which where now he's seeing it's panning out in the current gold cycle. It's one of the longest cycles he's charted. His services will allow you to capitalize on what he believes is the lifetime's most significant generational wealth creation pattern. Rob?
Jerry, thanks for having me on, and pleasure to join you at your conference today.
Go ahead.
So I'm providing an update on precious metals, so go ahead and get it into presentation mode. I wanted to provide an update as we move into the fall season, because fall season is often very bullish for the precious metals, and we'll get into that during the presentation. And wanted to start by giving a general update. We see gold and silver both consolidating in different patterns, and we'll get into that during the presentation and show you what those patterns mean for your trades for the rest of the year. There are some technical chart changes from our last update on our channel that we did last month. The derivative markets appear to be preparing for another upside move as they consolidate. We'll go over the COT report where speculators are reducing their spreads on both gold and silver, and the supply and demand fundamentals are favorable for both of the physical metals. Long term, we have the gold technical chart here. My viewers will recognize this chart. I go over this at least a couple of times a month for our subscribers. We have a classic cup and handle pattern here on gold dating back to its previous high of 1900 back in 2011. It looks like we have broken the handle portion of that pattern, and we have a bull flag pattern forming there on the right side of the diagram outlined in green, which we think is bullish for gold moving forward. Moving to the gold 6-month technical chart, we're breaking down the handle pattern. We had a downward trending pattern dating back to last July through the end of the year. And then we've had a consolidation pattern in gold here the last 6 or 7 months of 2021. You can see it's range traded anywhere from about that 1750 support line up to about 1900. And right now it's trading in the 1800s today, around 1812 at the time I printed the chart this morning. I want to draw your attention to the volume chart at the bottom here, at the bottom right-hand corner. We have a descending line, as you note here in purple, meaning the overall volume and trade on the COMEX derivative market has been consolidating, and we think that's leading to the next bull market in gold here for probably starting the rest of this year. Here's a COT report as produced by the CFTC. We have the consolidated report from barcharts.com, and you'll notice that we have this consolidation pattern on the bottom right-hand side of your chart. The 4 major groups that trade the derivatives market, the producers, swap dealers, managed money, and other reportables, are consolidating towards the mean of 0. In yellow, you have the other reportables, which are wealthy family offices and wealthy individuals, and also the managed money. which are the hedge funds and the financial interest, reducing their longs in gold. And you have the swap dealers, which are the bullion banks, and the producer merchant category, consolidating their shorts all towards the mean. Moving to the physical side of gold supply, we have, per the World Gold Council, Q1 gold supply is about 250 tons above demand, indicating significant gold liquidity in the market. And that's why gold is in a consolidation pattern, because there is enough liquid gold for traders to use. And for those that use it for industrial purposes and jewelry purposes to use, gold price recent weakness indicative of the current supply situation that we have. Moving into the silver long-term technical chart, we see that silver is trading nowhere near its previous high in 2011 at $50. It has been descending until last year when the pandemic started and people moved into silver as a long-term inflation hedge and a safe haven trade, much like they did gold. Silver has been consolidating since about mid last year, about August of last year. The last year between $30 and $22, it's challenged $30 twice, has not broken through. So the technical charts indicate that silver will probably trade in a range trade for a little bit longer than gold will. There's no indication from the technical charts that silver is about to break out. You'll also notice the volume chart on the bottom. There is a descending highs dating back to last July and overall open interest. So the derivative traders are consolidating their positions. We've seen an overall reduction in the amount of open interest on the COMEX market here in the US. The short-term technical pattern is descending for silver. It has fallen through two support lines, the $26 support line and the $24.50 support line that I've graphed for you here on the chart, and it's not risen back through. So we see short-term bullishness in silver from a technical perspective. We think that gold, when it moves, will move before silver, although silver tends to move a little bit more violently when it does move in response to gold. But we'll need to see a sustained move in gold above 1900, I think, before we'll have any sort of silver breakout above that $26 line. Looking at the silver COT report, we see also consolidation in silver, the bottom right-hand corner. The two bullish entities, the other reportables and the managed money hedge funds, have reduced their positions towards the mean of 0. So they're net neutral on the trade. The swap dealers and producers are also moving towards net neutral, although the producers tend to have more shorts because they're protecting their price exposure as they produce the silver throughout the year. So we don't think that they'll go all the way to 0. They'll continue to have some shorts, but they have reduced their overall silver short position. This consolidation pattern matches what we see on the price chart, and that's why silver is range trading as well. Typically, when you see this happen over time, you're expecting either a big breakout upside or to the downside in the middle. Fiscal silver supply and demand statistics from Metals Focus and Bloomberg. Silver is different than gold in that we are in a short-term supply deficit. We have less than 1 billion ounces of global supply expected for this year, but we have more than 1 billion ounces forecasted by Metals Focus and Bloomberg for the rest of 2021, meaning we will need to acquire some additional silver stockpiles, probably from the derivative markets and other large holders. That will force the silver supply or the silver price to rise before those holders, we believe, will give up their silver. And that will cause some of the manufacturers, such as Samsung and Apple and other companies, to have to bid the price higher. We may even see them get more involved in the derivatives market to drive that silver price up as we get further into the shortage the remainder of the year. Wanted to take a minute and talk about the mining stock flows. Here we have a chart from Orn Inc. run by Kai Hoffman. The Canadian Resource Financing Index, this week's score is down to 57.42 from last week at 78.46. There has been a substantial lack of flows into the junior mining stocks, Canadian-based mining stocks over the last week, and we're nowhere near the highs of the index score of 100 that we saw during the previous gold boom in 2011. So we have not recovered from the 2011 highs over the last 10 years. But what we see is a substantial upside into the junior mining stocks as money will flow into them. We see that people will rotate into junior mining stocks as they begin to rotate out of the general stock market. Of course, we're sitting at all-time highs in the general stock market, so we expect that will happen sooner rather than later. The general global S&P TSX Global Mining Index is bullish for the year. We started the year around 100, or ended, a year over year about 100. We're now trading about 103, 105. So we're higher than we were year over year. However, what we saw early in the year, about 114, 115 print in May, has come down a little bit. So overall, the overall mining stock indexes are holding strong for 2021, though we'll see in gold and silver that pattern does not match. Gold and silver have had weakness in the mining sector. We'll get into that in the next few charts. Here we're graphing the NYSE Arctic Gold Bugs Index, the HUI. The 5-year trend is up on the HUI, although the index is down year over year. We're going to show you the GDX here in a minute with an identical pattern. The HUI and GDX have been trading almost identically for the last 5 years, and this is indicative of the general market sentiment towards the miners. It is at a low point, and we believe this is a good entry point if you're interested in investing in the mining stocks. The GDX, which is the VanEck Vectors Gold Miner Index, exact same pattern, 5-year uptrend, although the last year has been punctuated with year-over-year losses. We do see some weakness in these mining indexes, but we think they will come back. Here I'm graphing gold versus the miners. This is the same gold chart I showed you at the beginning of the presentation. Gold is forming a cup and handle pattern, recently reached 2060, a high last year. However, in late 2016, the gold mining indexes, the GDX and the HUI, as depicted in green and yellow here, diverged and have not recovered per the gold price. So we see some weakness in the gold price, but we see as potential for the gold miners to rise higher than gold throughout the rest of this year and into 2022 because they have a lot more room to run. And we think what is happening is the gold producers are showing strong earnings as gold trades above the average world cost of mine of about $1,350. They're receiving earnings reports, but they're not getting price increases. So we think they have a lot of upside as gold continues into its next bull trend. We do think that gold will continue its next bull trend the rest of this year, and that will buoy some of the mining stocks as well. There's some sector factors both in silver and in gold. The headwinds are in green and tailwinds in red that we see. In silver, a headwind is current signs of a silver supply shortage I covered earlier in the presentation. There is caught repositioning towards an upside move. That's a consolidation pattern we saw in the derivatives market. There's a lack of current resource investment, which means future supplies are going to be tamped down, which means when people go for the silver, it's going to cause the price to rise faster because we're going to have a future supply crunch. Silver is also a very strategic mineral for the world's militaries, China's rising middle class, the technology evolution, and the emerging space race. We also see the Q4 love trade in Asia for the precious metals buoying silver's price heading into the last quarter of the year. The tailwinds are there's current weakness in the spot price, although we think that'll change. There's basically the summer doldrums or nonchalance towards the resource markets, which has been normal the last 6 or 7 years with the exception of 2016. So it's nothing to be worried about, but we do think that they will come back in the fall as they typically do. We also think that there's a lack of investor awareness. Bitcoin, and particularly Ethereum and Litecoin and the altcoins in the past few weeks have been taking center stage and taking some of the investment away from the resource stocks and from gold and silver. However, we do think that that will change heading into the Q4 of this year. Gold has similar headwinds and tailwinds, although gold has strong central bank buying, is strong after the last 10 years. Since 2011, gold hit a high, the central bank started buying and they haven't stopped. And that tells us that they're utilizing that as a key high quality liquid asset in the banking system in alignment with Basel III regulations, which started to take effect in Europe and America in June 28th of this year and will start to take effect in the UK in January 1 of 2022. So we think that that is a headwind for gold as it's recapitalized into the central banking system. Of course, the Q4 love trade in Asia and also worldwide debt levels have reached all-time highs. We think that that is a bullish sign for the gold market. There is a general lack of investor awareness in gold, and there's stronger current above ground stocks available in gold than there is silver. So there could be some short-term price weakness, although we think that that trend will reverse. I want to take a moment to highlight a company that we first covered starting last year. It is Baru, which is formerly East Asia Minerals. This company, we think, is a near-term producer in Indonesia, and I want to talk about some of the highlights over the last few months. There was a recent lawsuit against the Indonesian government by a local NGO in Indonesia. Baru is not named in this, but we do think that the mining stocks in Indonesia have been affected by this disproportionately. So it is an entry point for people wanting to invest in the market, and Baru, we think, is a good potential company for that. There's some highlights for Baru for the year. They have just started a 35,000 meter infill drilling program underway to enhance the value of their 2010 43-101 report, past existing 835,000 ounces of gold resource. They have also added Colin James Davies, who has 30 years of experience to the board, bringing the total management experience in mining to 150 years for the company. They're currently acquiring land and expect to start building the mine sometime in 2021. And we hope that they start to pour gold in 2021 as well. That would be a very positive development as they start realizing revenue, and the investment community will start investing in Baru. They trade on the Toronto Stock Exchange under BARU. And that will do it for my presentation today.
Excellent job, Rob. As always, very insightful graphs. We're waiting for Terry Filbert to sign on. So in between that, we got a few extra minutes. Feel free to obviously ask Rob any questions or Q&As that may have. I think I see Terry just signing on right now, man of the hour. I had a question earlier for Rob, actually. What's your take on some of the industrial metals? I mean, it's, your site is Gold, Silver, Pros, obviously, but obviously you have some sense of uranium, industrial metals, and everything else too, I'm sure.
Yeah, we've done a 3-part series on uranium. We think uranium is about to hit a very big bull market. Of course, we talked in the last segment with Encore about the bullishness in uranium and the fact that Sprott is getting involved. Sprott is buying the equities and helping fund the equities, but they're also buying the actual uranium product itself. We see strong headwinds going into uranium, and it's time. There's a lot of reactors coming online around the world, and we do need uranium as a baseload energy where countries are de-emphasizing the fossil fuels, oil, natural gas, and coal. As far as the other industrials, we see them being very strong. Zinc, lead, copper, all doing very well. Copper is trading at 10-year highs right now. We see no abatement on that. We've seen educated market analysts say that they could see the price of copper triple in the next 10 years due to foreign demand in emerging markets, and we agree with that. So we think the base metals are doing very well. We've covered them quite a bit because a lot of the gold and silver now is found in these polymetallic deposits where you don't get pure gold or silver, you get them as a byproduct of the base metal. So we certainly pay attention to that as well.
Definitely. Perfect. Okay, I think that's all for the questions, Rob. Hopefully you can stick around to hear an update from Terry. Obviously a very interesting company in Indonesia, turnaround story, feature on BBC and Reuters for all the, unfortunately, recently wrong reasons, but hopefully turning things around is CEO and president of Baru Gold, Terry Filbert, with this emerging gold mine in Indonesia. Baru trades on the TSX under symbol BARU, on the US BARUF. It's famously known for back in the days under East Asia Minerals, hitting over 700-800 million market cap with an asset called the Miwa project. But focusing really on the short-term productivity and cash flow is Sangihe asset, which, as Rob mentioned, has over 800,000 plus ounces, more than enough in today's market. To two asset company, it's heading towards pre-feasibility, construction of the mine as well. So go ahead, Terry.
Hey, you already did all the presentation. I don't do anything now.
No.
That's great. Okay, anyway. So yes, as Jerry was saying, we have several assets. I started in this company in 2017 trying to actually acquire Sangihe for my own operation, my own personal operation. I was persuaded to take over the company in 2017 and try to bring both assets back online since the company had been kind of in hibernation for a few years. Basically, the Sangihe asset, which is located in North Sulawesi, which is, see a little star on the right. This is right smack between North Sulawesi, Indonesia, and Mindanao, Philippines, on the gold reef, which we'll talk about in a minute. The other asset, which is the far left, which is basically, they're not too close to each other. The top of the Sumatra island is Miwa on the area of Aceh in Sumatra. And that was drilled out in 2011 very successfully until there was an issue that we'll talk about later. So where we're at right now is we've just been issued in February our 30-year production license for Sangihe mining project. That's at 42,000 hectares, which we've actually now given up down to 25,000 hectares because that's the gold bearing area. Construction, we're hoping to commence fairly soon. We're in the middle of land acquisition, which has been delayed because of COVID, shut down the country for several months again. And now things are just starting to come back out of that. So we're hoping we're already starting to acquire land again, and we hope to basically be able to start into construction within 60 days, not sooner. And we're shooting for production by Q3, but we're now probably almost with the loss of this last quarter, almost into 2022. So unfortunately, this stoppage because of COVID closing down the country for several months has not been very useful. Our production target initially will be 1,000 ounces per month. And again, that would basically be probably towards the beginning of 2022. And once we start up that production, that's some artisanal our artisanal production system, we will order what's called a Merrill plant. That Merrill plant will take a year to basically be built, delivered, and installed. But once we have the Merrill plant, and we'll be able to size this project to probably about 4,000 ounces a month. But then, 12 months after we get the plant, which is 24 months after we get started here. It's fairly inexpensive. On our Indonesia feasibility study, we were quoted about $875,000, it's $800 range. Since that time, though, we have basically had fuel prices go up, so that'll go up a little bit, but it's still sub 1,000 level. Management team, we have actually close to 200 years now of mining experience. We have a really strong board, a number of gentlemen who've been, at least 50 years each with mining experience around the world, including running heap leach pads and, building large Merrill operations. So we have a really strong management team, both in-house and also in country. And then everyone basically on the team, whether they're in Canada or in Indonesia, does have Indonesian project experience and successes. We are starting actually next month a 35,000 meter drilling program. We have basically about 27,000 meters already drilled out historically of the last, I think they started drilling 20 years ago. These are the previous companies that have been on this. And so we'll drill this out to, we have a 43101 for 2010 on 835,000 ounces. That's all inferred at basically over 1.2 kilometer area. We want to bring that up into measured and indicated. And so that's what this drilling program will start to do. And it'll go beyond that area where we had drill holes to a line that goes to the 1.4 kilometers to the next shore. And that one basically needs to be explored. The anomaly goes all the way to the shore. So we know the same gold line is there, but it has to basically have exploration holes dropped, and then we'll basically do the infill on that. We're expecting to get, hopefully over 1 million ounces in both for the entire area, which is only 10% of our entire area of what we'll be exploring. And then Miwa, as I talked before, Miwa basically has been suspension site before I started with the company, and we're going to want to get back to Indonesia, which is hopefully the next few months. Once things kind of settle down in Indonesia from the COVID, we will start working on getting that back up and running again in the way of getting the license restructured. Again, this company's been around since 2002. I came 2017. But interesting history, 2009, they actually had Mongolian assets and sold one of their assets for 73 million. In 2010, they started drilling out Miwa. And in 2011, the Miwa strike brought up the valuation to 800 million Canadian. On top of that, basically, they were only 30% completed on their drilling when they the government sort of put a moratorium on drilling and also exploration on all of Sumatra. And so they had to basically close on the operation. Only 30% had been drilled out. So they only had 3 million ounces where they're expecting, probably 8 to 10. So everyone's very excited to get that started again. But like I said, it's not been really moving for about 5-6 years. So I've been working on it for the last 3 years, but my focus has been on Sangier to bring cash flow in earlier. 2017 I started, and we've been working for those last 4 years just to get Sangier into get our environmental license finished, our feasibility studies finished, and get the license issued, which we've done. Now we're focused on getting into production. Sangier is right in the middle of the gold reef, like I mentioned before, between Mindanao and North Sulawesi. There's about 20 volcanoes that brought this gold up about 1 million years ago into the magma. And basically, our island is made up of basically 3 volcanoes, at least. I've heard as many as 5, but at least 3. Here, come down here to, see, we're going along here. And here we go. Basically, the 3 volcanoes, well, let me go back up here. So we have 1 volcano, basically, which is active up in the north of the island. We have actually the south part of the island. I'm sorry, we're jumping around here. This is our 42,000 hectare area. Part of that is water, which we gave up. Part of it, actually, we also gave up an area here, which is the volcano here, which is a extinct volcano, which There were some people worried that we might hurt some birds at the top of the volcano, but actually it's a national forest and there's no gold in this area. There is no reason for us to be even near there or be doing their work. But again, it's of no use to us. We pay taxes on it, so we've actually relinquished all the water area and a national park area, and also some protected forest in this area too. So all that area which we can't really use. But down, so there's a volcano up on the north here. There's a volcano here in our area which we've given up. But the area we're most interested in down here, which is basically there was a very large volcano which 100,000 years blew up. It's a collapsed caldera and spread gold all along this area. So the south area is basically where we're focused on. This is the gold bearing area. It's about 25,000 hectares, which is what we held on to. And basically, these are the two ore bodies working on right now, Bini Bas and Bawani. The drilling program goes across Bini Bas and Bawani. It's 835,000 ounce resources actually already been proven here. It basically has inferred, unfortunately. And then between Bawani and Salarong as the line keeps going. So we will be proving this up to measured and indicated, and then bringing the drilling program along here to Salarong. This entire program will basically take about 1 year to basically complete. There's also a number of other ore bodies that we've have preliminary. We have preliminary data on Tawari, which there's a lot of illegals down there on Sadet, and there's actually 2 or 3 ore bodies down at the bottom, also which they're not showed here on the map, but they look very, very promising. And we'll be exploring those in the future as well. Again, like I said before, we had 27,000 hectares drilled since 1990. And so it has gone through a number of companies before East Asia. And so East Asia came in 2007 and started basically drilling around that time. There will be the Sengi will be 2 pits. There's a larger pit, which has majority of the properties in it, most of the materials. There's also a smaller pit that also has probably around 20% of the material. And we'll be doing some drilling between these, there should be a link between the two, though they weren't shown before, but they believe the link goes around the side of the pit, not directly between the 2 pits. This is what the plan we're building right now. So we're acquiring the land for this area. We'll be using the large waste dump down here. These 2 are optional waste dumps. We'll be building our 2 heap leach pad system, as well as the processing plant and then the ponds down here. So this area will basically take around 2 months to build. And we'll basically be starting that up, we're hoping within 60 days. Again, this pricing is from our 2019 Indonesia feasibility study. This is being updated right now. We're hoping to release a pre-feasibility study based on 4101 parameters. That will be out hopefully within the next 30 days. Again, because inflation, this number is expected to go up to at least $100, if not maybe a little more. Fuel prices were very inexpensive at this time, so it's just on fuel oil by itself, it'll go up a bit, but still sub 1,000. And this is basically this is what we're dealing with right now on Sangier. You notice there's an indicated area here of 58,000 ounces, 800. This is the area, this is the number of ounces that we're looking at on those 2 pits. And that's what we focus on. This is oxides at surface, very quick to basically remove, very quick to basically process, and very inexpensive to process. Though we do have indicated, or not indicated, so we do have sulfides also. I mean sulfides. Yeah, sulfides, we go. We also have sulfides, but we have not basically started working on a recovery of sulfides. So we'll be focused on oxides in the next few years. And then comes the Miwa. This is, a lot of people get excited about Miwa. It's an amazing operation. It was sold just recently, this last year, it wasn't sold. It was Matabi was sold down south of it. Sorry, Matabi is sold just south of it, about 200 kilometers, and it has 8 million ounces. It was sold for 1.2 billion to Track Indo. This is estimated to have over 10 million ounces, and it's not completed the drill out yet. The drill out was only at 3.3, so there's still a bit of work to be done. It actually there was a fix on it a couple times, and poor management and run through with it. So we are feeling that we probably can get it, back up and running in the way of basically getting the licensing, restructured so it can be pushed forward again. Until I get back to Indonesia, I can't do much on it. So it's going to be sitting there and it's, again, like it's the priority after we get our self into production and cash flow. And so, as we're saying, this is the 1.2 million we're talking about, the Tavi project. And we've already spent $20 million in the drilling. And we have a great deal of drilling information already. So we would be building on that and trying to bring that into a exploration again to finish the drilling. And more of, again, this is basically Sumatra, the gold reef, where we're on the top of that gold reef. The Tabi is right down here on the gold reef, which is the same area. And 2021, we've got the land acquisition almost completed here. We should have that done within the next month, I'm hoping. Sangier heap leach construction will start immediately. And then we hope to get the first gold pour by the end of the year. We're still pushing for the end of the year, but if we don't get this in the next month started, it will probably be the first month in 2022. And again, we have a strong management team in Indonesia, also in country as well. Is there any questions?
Great job, Terry. Q&A, please submit it in our chat box or send it to us on our various social media channels. I see our next panelist has just joined us. We got about 3 minutes before Jayant's presentation comes on. I think Terry, you mentioned this already, but obviously with a question from our loyal Borrow and EAS investors group earlier, they're obviously looking for an update on land acquisition and how many hectares we need.
Well, land acquisition, basically, we have several phases. The first phase will be 30 hectares. And we're not going to basically release right now how many hectares we have already acquired until we basically can put that in the press release.
Okay, fair enough.
We're authorized for up to 110 hectares, but that'll be over several phases. So basically, our first phase is just to get 30 hectares together, and then that'll allow us to get up into operation.
Got it. We had a question earlier from Dave Lee in regards to the lawsuit. So it seems like the illegal miners locally are suing the government. How likely are the local miners able to win lawsuits in Southeast Asia? It doesn't seem like the odds are very good.
No, the odds are never very good. Basically, because you have to have reason to sue. I mean, they're suing the EDSM or the mining department on they shouldn't have issued the license, or they didn't follow the laws. They follow the laws really. They still follow those laws really strictly. We basically had to go through a couple hoops a couple of times just to make sure it was the way they liked it and the way they wanted it. So they follow those laws very, very, very strictly. Also, they're basically suing the company, or not company, the EDSM, saying they issued the license not following the 2009 light mining regulations, which really don't cover our company because we're what's called a contract of works. Contract of works are under earlier regulations. Nothing, but again, they're not. The lawsuit's not well thought out. It's not well written. It's more of just a pressure tactic, and I think a tactic to get some news. It's being run by two lawyers working on the department. They don't have it. It's not even a real law firm with offices and a bunch of lawyers. So it's basically there just to put pressure on the EDSM and also on the company. But they're using a couple of the ladies who live on the villages, which basically, they tend to work with the illegal miners. They make their money from the illegal miners. Illegal miners basically are being pushed out, so it's affecting their income. Though they should, we're hoping they come work with us, and they can sell stuff to us and such, and there should be greater benefits working with the company than with the legals. We'll be there for 20, 30 years. Legals come and go.
Definitely. We have another follow-up question to that, Terry, from James. Has any equipment talked about being purchased? Do we have equipment on the ground at San Yihe while we're waiting for the land acquisition?
Equipment will all be leased. We're not gonna be, I mean, basically we're using contract equipment. So no, we won't be, I mean, we've got, we'll have some of the stuff for the drilling, basically, but not for the production. All that'll basically be coming through contractors, which are the discussions right now with those contractors.
Excellent. And you mentioned we're still aiming for 2021 production, but possibly into early 2022.
Yeah, again, we lost another 2 or 3 months because of COVID. I mean, last month we lost the entire month completely because we had COVID go through our camp. We had all of our people inoculated the month before, luckily, and so even though we had, I think, quarter of the camp test positive, no one got sick. But unfortunately, the health department still, asked us to shut down and everyone to quarantine. So, we can't do anything during that time. Also, several of the people we're buying land from, they also got COVID, and the entire island actually was put on a hot list. And so, even if you fly into the island, you have to basically then, quarantine, which wasn't, necessary before. So it does cramp your style when basically you're trying to get work done and people can't do that work. So, it's getting there, but it's unfortunately maybe pushing us in 2022, but we're trying really hard still to make 2021.
Okay, got it. Last question before we head on to Jayant was the discussion on from Raymond asking about your insider ownership. I mean, how much do you own stock and how much does the management own, Terry?
I and my partner probably hold, I'd say around 8% of the company. Basically, I own probably around 4%. Basically, management altogether probably owns over 10%. I mean, over 10% of the company.
That's right. And then Tocqueville at 20%, and I think some other higher net worth retail investor groups, another 10 to 15%.
We have a pretty steady group, which I keep in contact with, about 52% of the company.
Okay.
And they're a pretty solid group, and they don't really. They've been adding mostly. I don't know anyone who's been selling. Is that the prices gone down with the price of gold. A lot of people jumped on and bought more. So which is so that 52% may be higher now.
Okay. And then lastly, is there enough money to get to operation?
Yes.
Okay. Got it. Perfect. Okay. Well, appreciate your time, Terry. We'll get you to unshare your screen. But next up, we have Jayant Bhandari, former U.S. Global Investor Group. He's constantly traveling the world looking for investment opportunities, a well-followed advisor, investor, and speaker for the circuits that we all visit for the investment shows. Prior to COVID, he advises institutional investors about his finds. He was the director on the board of Golden Canyon, GCU, publicly listed Canadian company until his merger, $100 million plus, with another entity. Earlier, he worked 6 years with U.S. Global, which was Frank Holmes in San Antonio, Texas, which was a boutique natural resource investment firm. Jayant also follows O3 Mining, III on the TSX, and Cisco Group company. It's a gold explorer and mine developer on the road to produce from his highly prolific gold camp in Quebec, Ontario, Canada. O3 developing it has a multi-million ounce project in Canada. Along with that, Jayant also has a lot of interesting experience growing up in India and studying in UK, and just always a pleasure to hear from. Take it away, Jayant.
Great. Thank you very much, Jerry. So I learned a very expensive lesson in 2011, which almost bankrupted me at one point of time. So I'm going to talk about this most important lesson, which is that what an investor must focus on mostly is to manage the downside. What an investor must try to do is to make sure he preserves his capital. Now, if you protect your downside, the upside usually takes care of itself. Now, a lot of us invest in companies thinking we would find a 10-bagger, we would make a lot of money and retire for life. And then we get punched in the face what we thought would never go down actually falls badly, and then we lose our capital. Everyone who wants to make money, anyone who wants to achieve anything in life has to take a risk. The problem is that you have to make calculated risks. You have to protect your downside. And this is truly something that one learns when one has lost a lot of money, is speculating too heavily without really understanding the downside, that one realizes that preservation of capital is the most important part of any investment game. Now, a lot of people talk about 10 baggers. I have been investing for the last 20 years, and I cannot think of any company that I started with as a 10 bagger. I did not know of any company that would become a 10 bagger, which does not mean I have not had 10 baggers. What actually happens is that I invest for ups and upside, and I protect my downside. And as this company with good management progresses with time, I might end up with a 10 bagger. But anyone who starts off investing in a company hoping to get a 10 bagger is likely to lose his money. It's very important to rein in on greed and lust. And that's where people become disoriented when they become too greedy, looking for 10 baggers, that they become greedy. I have talked with a lot of investors who do not want to invest for a 25 or 50% upside. They simply want to focus on 10 baggers. Now, I am more than happy to make 25 or 50% of my money in 1 or 2 years' time. And that is actually, in my view, a good position to actually end up with a 10 bagger if there is such a thing that can happen. What I start with is doing a financial analysis on any company that I invest in. And I'm going to tie this in with O3 mining that I'm going to talk about, which happens to be the biggest part of my portfolio. What I do is that I go to cedar.com, which is a regulatory website, and I take out at least these 3 documents: the latest financial statements, the latest MDA and management information circular. Now, financial statements give me a visualization and a portrayal of the financial state of the company. The MDA, management's discussion and analysis, gives me an understanding of a lot of work that the company has done over the last 3 months and over the last several years. And management information circular is something that most people don't go through, but it actually tells you about the salaries of the management. It tells you about the ownership of the management, and it tells you a lot of information, the contracts that the management has with the company. And then finally, I do like to go to stockhouse.com and more usually these days CEO.ca to read what other investors are talking about to do with the company. So let me go to CEO.ca to do with O3 mining. I have circled it on the left, a very good way that you can actually start working on a company. CEO.ca gives you the website address, so you can click on that tab to go to the website. You can go to the CEDAR documents. You can click on that and it takes you to the CEDAR documents of the company. It also tells you about the insider filings, what the management has been doing with the shares of the company that they manage. Are they actually buying shares of the company? And then the short history, short selling history tells you something about what some of the people might be thinking about the company. So as you can see with O3 mining, there's really not much of a short position in the company. Once I have taken out the financial statement of the company, these are the 4 things I'm primarily looking for. The net cash the company has. And I tend to ignore the non-current assets of a company, which is not going to be the case with O3 mining, but I will tell you why. I then want to independently put a value on the properties of these companies, and I want to understand the share structure of these companies, how many shares outstanding they have, the warrants they have, and what is the exercise price of the warrants and the share options that the company has issued, and what are the exercise prices of those options. Let's look at this latest financial statement of O3 Mining. They have, as you can see, the top red circle that I have created, they have about $67 million in cash with the company. Now, if you look at non-current assets, they have investment in associate worth about $51 million. Now, this is actually liquid investment, but because of a technical reason, it goes into non-current assets. So for my purposes, I'm going to consider this to be a liquid current asset. And this is their 25 million share investment is in a company called Moneto Porcupine. And then I go down, what I do is that I add up the current assets with this investment in associate, and I deduct the current liabilities, which gives me a sort of net assets, but I should also deduct the non-current liabilities. But in this case, as you can see, the non-current liabilities are mostly to do with technical aspects. These are legal entries, and these are not necessarily liabilities. What I then do is that because I usually ignore the non-current assets, which are actually properties, I do a discounted cash flow analysis of those properties. I want to understand what kind of property rights this company has, what kind of tax regime they operate under, and what kind of local support the company has, so that I can use a proper discounted cash flow valuation of the company. If I think that tax regime is going to be not favorable to the company, I can easily increase the taxes. If I think the permission for mining might get delayed, I could easily increase the discount rate, and I can increase the time duration for which I discount the cash flow. Unlike a lot of other people, I don't want to impose my metal price views on my discounted cash flow analysis. I tend to use a conservative metal price regime, and I tend to use a 20% discount rate to decide on whether I want to invest in a company or not. So let me elaborate what I have said using O3 Mining's numbers. As I said, it's by far the largest position I have in my portfolio. They have 69 million shares outstanding. Now I'm going to ignore the warrants and options that the company has, because most of them have exercise price of over $3, and the current share price is about $2. So they are so much out of the money that they don't really appear in my calculations. The share price when I prepared the presentation was $2.06. That gives O3 Mining a market capitalization of $142 million. Now, keep that in mind. That is the value that the market is attributing to this company, $142 million. Now, what do they have to justify this $142 million market capitalization? They have cash of $65 million. Now, as I said earlier, that they have also investment in a company which is registered as non-current assets, but which is actually current for most intents and purposes. That is their ownership in a company called Moneto Porcupine. And that ownership is worth $56 million. Now, what you want to do is to deduct $142 million by cash and the share ownership of Moneta Porcupine to get what is called enterprise value. What is the value of the assets that the market is giving to this company? And it comes to be only $21 million. Now, what do you get for those $21 million? They have two major projects. One is Alpha project, which in my opinion is easily worth $50 million. About 2 years back, Agnico Eagle was in a war with OTCQB Group to get hold of this project. And Agnico Eagle those days was prepared to pay something like $30 to $40 million. I'm assuming they would be more than happy with all the work that has been done on the project to pay at least $50 million for Alpha project, if not more. So for $21 million, I'm getting an Alpha project, which is already giving me a nice upside to my enterprise value. But then the real thing to do with O3 Mining is the Marben project. This is their flagship and is their biggest project. They have done a PEA on this project. They are starting to work on pre-feasibility study to do with the project. And according to the PEA, the project will produce about 1.8 million ounces of gold. Now, since the PEA, they have discovered a lot of areas which should add to the new resources and increased life of mining. So for $21 million, this is what you are getting. Now, 1.8 million ounce gold project based on my discounted cash flow is probably worth as much as is the market capitalization of O3 Mining. So based on enterprise value, I might actually have a 10-bagger here, except that it's not going to be a 10-bagger because there is a lot of cash and share ownership of Moneta Porcupine in the ownership of this company, but that also gives me a very solid downside support. As I said, for me, the downside support is extremely important because I want to protect my capital. What is, of course, something that market worries about is that the share price of O3 Mining has stagnated over the last few years. It has remained in the $2 to $2.50 range. And despite the fact that the company started with a financing at, I think, $3.88. So the company has mostly stagnated. And that is what worries a lot of investors. Now, that is something that worries me the least because I want to invest in companies that are inexpensive. Why should I be investing in companies whose price has gone up and whose visibility has increased in the market? So I am more than happy and always keen on investing in companies that market is not interested in and companies that look very cheap. Of course, my big question always is, why is that company cheap? Now, as I explained to you, there's a huge amount of about $120 million cash value sitting with O3 Mining. So my question and the question of any investor should be, is the management a good steward of the cash that they have? Would the cash that they have create value for me, or it would end up disappearing in lifestyles of the management? Another worry that I always have about companies is that would they be raising any funds from the public? When they raise funds from the public, they tend to raise that money at a discount to the share price. And then that undercuts my upside. So I'm always worried about public financings. As is the case with O3 Mining, I don't see a possibility of them raising money in the near future because they have about $120 million worth of cash value sitting in the treasury. Now that brings me to a very important question. What is the quality of management? About 10 years back, I traveled we were negotiating a project and I traveled with three gentlemen, Chris Lauder, who is now the president of OTCQB Development, Gernot Warburg, who is now the VP Exploration of Discovery Silver, and Jose Vizquerra, who is now the CEO of O3 Mining. And I spent a couple of days with them, and these three people went through the core of that project for those couple of days from early in the morning to late in the evening without worrying about food and coffee. That was something that brought these people in a list of respected management that I had. I saw the passion that they had about mining and about exploration and geology. So I am not worried about the quality of management when it comes to O3 Mining. So in conclusion, let's just very quickly look at O3 Mining on a per share basis. My ex-boss, Frank Holmes, always says, look at everything on per share basis. So that's what I'm going to do. A share price of O3 Mining is $2.06. If you add up the cash value that the company has and their investment in Moneta Porcupine, that is worth $1.75. And that provides you a real good, solid downside protection. The Alpha project, if I use 50 million as the value of the project, is worth about 72 cents for each share of O3 Mining. Now that already gives me a nice upside. And then you have the flagship project of the company, the Marvin project, which in my view is easily worth, could be worth as much as the market capitalization of the company. But given that I have a good downside support with the cash value, Moneta Porcupine share ownership of the company and the Alpha project, I'm more than happy to think that I have a good downside support and that the upside would take care of itself. Thank you, Jerry.
Excellent. That's a great presentation. I'm inclined to buy more and more myself. I've known the OSK and obviously Sean Rusin. The group has been very, very successful with their project. So I think we have a few of the execs from O3 on board as well. Just before we jump to Alex, I know they're actually on literally at the airport, so they may or may not be able to connect very, very fluent, very well. But do we have any Q&A for Jayant? Jayant's always obviously got great stock picks, so I'm sure there will be probably some questions from the audience. We'll just give it a few seconds to see if anything pops up. Oh, I think we had a question from Terry earlier who had to leave. He was wondering if you're still covering the Japan gold or Levinson resource.
No, that the company that I have been invested in is a company called Irving Resources. The ticker is IRV, and I am still very well invested in that company. I very much like the company. I very much like their projects, and I absolutely love Japan, which is the best country on the planet.
Excellent. Okay. Very cool. There's been a few other obviously very successful projects there with Newmont, Japan Gold with John Proust. So interesting country to be in, that's for sure. Thank you, John. John mentioned a very good talk from Jayant. So I think we're seeing some attendees drop off. It's been about 4 hours, so it's been a great day of conferences. But let's move on to Alex again to present a little bit on O3 and their corporate video.
Welcome to Miniego Tua, O3 Mining. This is our opportunity to look into Val-d'Or. Val-d'Or is a fantastic place to be in terms of mining. We have manpower, we have electricity, we have roads, we have railroads, and more important, 30 million ounces of gold has already been produced. There is mines every other kilometer around here. The amount of endowment that we have here in Val-d'Or is extraordinary. This is a story that will be starting to be built in order to become an exploration developer and finally a production company. Please follow us, where we'll show you what O3 Mining is about.
My My name is Louis Gariepi. I'm the VP Exploration at O3 Mining. We are here in our Val-d'Or facility.
My name is Sébastien Vigneault, Exploration Manager for O3 Mining in the Val-d'Or facility.
We're going to see intercepts from the Marben project.
Regarding the mineralization that we found in the Marben Dike sector, here the hole 045 is located northwest of the Marben pit, and we have a really strongly altered granodiorite with the sericite-fachite alteration. So this intersection returned 5.3 grams per ton over 3.3 meters.
Now we're going to see this intercept in hole 33. This one was testing the extension at depth. It's a 2.7 grams per ton gold intercept over 10.6 meter, starting at 38.9. And this is very important because it's near surface and close to the PEA pits. Clear, again, a demonstration that we have potential to grow those pits in preparation for the pre-feasibility study. And in this case, gold is associated with those felsic dikes. The gold starts with the dike with a very good 26.9 grams, followed by 1.2, 2 here, 0.4, 0.9, 8.9, 0.4, and 0.5 over here.
We will show a drill core from the Golden Ridge zone, which is a new discovery, which is inside the granodiorite here in pink color. And as you see in the map, this zone has a good potential to expand towards the west. Here we have the hole 12. It's 1.2 gram per ton over 9.7 meter. It's also within a granodiorite just south of the Kientz horizon. And it's a kind of wide mineralization zone. Varies from 10 to 12 meter and more. Here we've got a 1.5 gram per ton, 1, 2.1, 2.4. If we go here on 1, 1.7, 2.4, 1.1 gram per ton. So the grade envelope is really consistent within the envelope of the zone.
44. Now we're going to see the intercept from this hole 44. We intercepted a new mineralization unknown before at about 300 meters vertical, hosted in 20 meters wide gabbro dike that returned 2.1 grams over 7.5 meters. Here's the typical intercepts from the Kientz deposit from hole 66, 8.9 grams per ton over 9.8 meters. So you see good thickness, very good grade, starting at 49 meters in the hole. So here, what we find quite often at Marben, very high grade. In this case, 132.6 grams of gold associated with this nice little quartz vein with a number of gold, visible gold dots within the vein.
We'll see core from the Bulldog zone. We'll see core from the Bulldog zone. The Bulldog zone have been discovered in 2018. The grade is also well consistent with grade over 2 grams here, 2.7, 4 grams here, 5.9 gram, 7 gram, 8 gram. So it's really a nice thick zone with grade above 2 grams. The drilling on the Bulldog zone has two purposes. One is to extend the mineralization at depth. We want to achieve the drilling up to 1 kilometer deep. And the other part of the campaign was to infill drilling to be able to have a resource estimate on the deposit on the 50 meter by 100 meters spacing. We'll see core also from the Akazaba zone. We will also have a look on core of the Simcar zone. The Simcar mine is also along the Panamac Seal, which is a gabbro intrusion, and some granodiorite, and it's formed of shear zones and quartz vein with tourmaline and pyrite. Here we have the 0321 of the Simcar zone. It was drilled 600 meters down the rake of the historical mine. I can show you some really nice piece of core with chunk of visible gold, and so long from the under meter that is shown here, you get some visible dot point with also accumulated of telluride. The under sample here on a land of 1.2 meter came back of the lab with a grade of
so we will see in here a drill intercept in the Omega. So we will see in here a drill intercept in the Omega sector that was drilled last winter. Drilling old number 364. There we have nice envelope of quartz tourmaline pyrite veins. So a very promising area for more drilling. From this zone Pontiac that we call Pontiac East, because it's located within the Pontiac sediment south of the Cadillac Fault. The intercept that we're going to look at is an extension of drill hole from 2019. It returned 13.4 grams per ton gold over 1.5 meters, and a bit deeper in the hole we have a second intercept of 6.6 grams per ton over 2 meters.
This winter we drilled the Akazaba zone, and in 0348 we hit 1.4 gram per ton over nearly 30 meters of the Akazaba zone. So we have nice core here with pyrrhotite and chalcopyrite replacement. Really nice chalcopyrite. We've got also some veinlets of carbonate and chalcopyrite and pyrrhotite. The zone owes a good amount of gold, 1.5 gram per ton over nearly 30 meters, but also owes a good copper value up to 2% locally in some samples.
We're confident that with the team that we have in place and the properties that we have and the financing obviously behind, that we have all the ingredients we need to reach our objective of becoming a major player in the mining activity in the region.
Welcome to O3 Mining. We are the new generation of mining in Val-d'Or.
Very well done. The video. Alex, can you hear us? I know you're joining us from the airport, so maybe did you want to say a word about the company at all? Some catalysts coming up? Hopefully you have a...
Hi, Jerry. This is Jose Vizquerra. I'm the president and CEO for O3 Mining. First of all, thank you so much for attending the conference. I am really sorry that we're joining from the airport, but in any case, O3 Mining is a new company, has 2 years. We have been able to finalize a preliminary economic assessment in Val-d'Or. We have been able to show value, fundamental value for $423 million with a 5% discount rate. Our objective is very simple. We are intending to convert the resources from inferred to measured and indicated to finalize the pre-feasibility study by the end of the year. Results are accompanying us, as you see on our last press release, and if not, you should go and look at that because it's showing how robust it will be inside the pit. We're showing the extensions of the pits, which means that things could even get better. And we are in the process of drilling a particular area called Camflo, which is on the eastern side, on the northwestern side, of Marban, which is close to the old Camflo mine, which now is part of the Canadian Malartic mine. So we have a very clear objective, which is to convert resources, expand resources, have a discovery with Camflo, as well as we are continuing to expand the mineralization at an area called Bulldog in one of our properties called Alpha. We have right now around 70,000 hectares in Val-d'Or, which is one of the largest land packages in one of the most important jurisdictions, such as Val-d'Or, where more than 30 million ounces of gold has been produced. So I don't really want to take too much of your time, Jerry, but thank you so much for having us and thinking about us.
No, excellent presentation, Jose. Thank you for coming in last minute. I know you're at the airport en route, so hopefully we'll see you at Beaver Creek or maybe coming up one of the conferences in Europe. But I mean, obviously it speaks volumes that you're a big shareholder yourself. We know each other for many years through common networks. Hopefully we'll meet you in person coming up soon. But Jayant had a very good analysis of your company with obviously the shares of Moneta Porcupine, $65 million in cash. So really netting down your company to, like 21, 25 million in enterprise value, which is incredible for what you have in the ground. So definitely a buying opportunity. I think coming up in September, there's usually a bit of a rally as well from September to November. So I think I definitely want to watch, and I like your US symbol, nice and easy. Just add an F to the end.
Thank you, Jerry.
Sounds good. Thanks, Jose. So everyone, we're wrapping up the conference. Thank you for everyone for attending. The conference has been recorded. We'll be hosting it on YouTube as well. I think we had upwards of 50 plus at one point. Obviously, it was a long day, so we hope everyone enjoyed the content. It was a quick conference, 20 minutes each. We didn't really go too much overtime, so which is great. We had a nice presentation, a cluster of companies from gold, uranium, energy sectors. We had Jayant present. We had gold, silver pros. We had Brian Leni featuring some uranium stocks, and Justin Huhn, and of course Encore Energy talking about the coming updates and presentations. So thank you for everyone that's attended. For those that couldn't make it, this video will be up on our YouTube channel in the next 2 days or so. We look forward to hosting the next small cap conference with everyone. We'll be going to Beaver Creek as well. So let us know. Give us an email, send us a note or a tweet. We have our associates, Jack here from Jemini, Kevin as well. So thank you for everyone for attending. Thank you, Jayant. Thanks, Rick. Thank you for our sponsors and our clients and our investees for joining in on the presentation. We hope we all make some money in the next coming quarter, as we did the last three quarters before kind of the summer doldrums. And here it is for Small Cap Kickoff.